Good morning, everyone. So let's start with the topic which we have not discussed yesterday, that is about various intrastate supplies, interstate supplies, etc. So you can see this information. So page number 71. So this is what I was discussing yesterday. Because of the power issue, I have not completed the discussion. So say this: India, for the purpose of levy of GST, extends up to 200 nautical miles from the baseline. So what is the meaning of India? Up to 200 nautical miles. For the purpose of customs, India is up to 12 nautical miles. For the purpose of GST, India is up to 200 nautical miles. And in this chart, what I told you is that there are two interstate supplies, deemed interstate supplies. What are those two? If location of supplier in India and place of supplies after territorial waters and up to 200 nautical miles, then it is a deemed interstate supply. And even if the location of supplier in India and the place of supply is after 200 nautical miles, that is outside India, then also it will be deemed interstate. Now we are trying to understand what is the meaning of intrastate supply. So section 8 talks about intrastate supply. What is the meaning of intrastate supply? If location of supplier and place of supply is in the same state or same union territory, then it will be intrastate supply. So what is the type of GST that will be applicable? CGST and SGST. And there is a proviso which says that in these cases, irrespective of the location of supplier and place of supply, it will be deemed interstate supply. It will not become intrastate supply. What is that? Supply of goods or services to or by SEZ. What is special economic zone means? An area which is notified by the government for the purpose of encouraging exporters to start their business over there is known as special economic zone. Okay. So whenever we are making supply of goods to SEZ, or whenever SEZ is making supply of goods to us, so that will be called as deemed interstate. That's why it will not come under intrastate, even if location of supplier and place of supply in the same state. Okay. So for example, I am a supplier, I am in Tamil Nadu, and even there is a SEZ which is also in Tamil Nadu. Now this sale to that SEZ will be intra or inter, deemed inter. Okay. So deemed inter will be taken. So deemed interstate supplies. Okay. Supply of goods or services to or by SEZ. Then import of goods. Import of goods is also deemed interstate. And supply of goods to a tourist. So whenever a tourist is coming to India, if he purchase anything and he will get the refund of GST paid. So a tourist will be coming to India, he will buy something and he will take those goods along with him. In India he will pay IGST na. So GST, that GST he will get as a refund in the international airport. This model is there even in foreign countries also. For example, when you go to Dubai or Singapore, etc. Singapore, I have observed it. So Singapore, if you do any shopping, they will be charging you Singapore GST. And in Singapore international airport, when you submit the bills, whatever goods that you have purchased, you submit the bills. On that GST paid na, that GST paid they will give as a refund to you. So the advantage is what? So you don't have the tax burden. And like that, India also, so there is a tourist refund scheme. So whenever you are making supply of goods to a tourist, that is coming under deemed interstate, because you cannot charge CGST, SGST, because they cannot get two refunds. So only one refund, that is IGST. It is simple for that reason. Then next one, interstate supply. Interstate supply. So what is the meaning of interstate supply? So if location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it will be coming under interstate supply. Also some transactions will always be treated as interstate supply. What is that? Import of goods and import of services will be interstate. Even already I told you, supplier in India, place of supply outside India, that is also interstate. Because of that reason, export of goods and export of services will come under deemed interstate. Because in case of export of goods, location of supplier in India, but the place of supply will be outside India. So therefore it will become export of goods or service is also deemed interstate. Then this just now we discussed supply to or by SEZ. Then next one, supply in India and not covered elsewhere. Point number one, supply beyond territorial waters and up to 200 nautical miles from the baseline. What is this? This is what I told you. Supply after territorial waters and up to 200 nautical miles is supply in India. So that will become deemed interstate. Then place of supply under section 13 and that is in India. When you will determine place of supply under section 13, just now yesterday only we discussed. Place of supply under section 13, when will you determine? 12 and 13. Services, if both supplier and recipient are in India, 12. If either supplier or recipient in India and the other outside India, then it will be section 13. We discussed now yesterday multiple situations. So if you are determining the place of supply under section 13 and it is in India, then also it will be deemed interstate. For example, you see this. There is an architect. Where is this architect located? In Tamil Nadu, and he is providing construction services. To whom he is providing construction services? To Mr. Elon Musk. Where is Elon Musk located? Outside India, US. And in this case, place of supply will be determined under section 13. As per section 13, for property related services, what will be taken as a place of supply? Location of property. So where the property is in? Tamil Nadu. Now if you observe, supplier Tamil Nadu, recipient US, place of supply under section 13, that is in Tamil Nadu. Why? Because it is service in relation to immovable property. Will it come under intrastate supply? No, it will not come under intrastate supply, because once you determine the place of supply under section 13, it will be deemed interstate supply only. Okay, so it will not become intrastate supply, but it will become deemed interstate supply. Is it clear or not? So now tell me, from these two charts, whatever we have discussed so far, what are the transactions which are regarded as deemed interstate supply? Come on, try. Easily remember: import of goods, import of services. Next, export of goods, export of services. 2. Total 10 points pa. Okay, 2 you remember: import of goods, import of services, export of goods, export of services. Then SEZ related points: supply to SEZ, supply by SEZ. 3. Next, supplier in India, place of supply outside India. Awesome. Next, 6 more. Supply to a tourist. Supply to a tourist, that is also deemed interstate. Okay. Then supply after territorial waters and up to 200 nautical miles from the baseline. Okay. Then next one, place of supply determined under section 13. Place of supply determined under section 13, it will be always deemed interstate. Then next 2, listen. We have this in supply chapter, that is priority sector lending certificate. I am a bank. I am having some priority sector lending certificate which I will be giving to another bank for creating a fund. So this sale of priority sector lending certificate is also deemed interstate. Security lending. I am having shares. I will be lending the shares to borrower of the shares. I will be lending and you will be borrowing, for which you will pay me lending fee. So again it will be deemed interstate. Okay. Apart from this last transaction, we collected some advance, but we don't know whether it is intrastate or interstate. Then also it should be deemed interstate. Okay. So these are the 10 transactions which you can see in the next page as deemed interstate supplies. Deemed interstate means always what is the type of liability that will be applicable? IGST. Supply to SEZ or by SEZ, import of goods or import of service, export of goods or export of services, location of supplier in India and place of supply outside India, supply of goods to a tourist, and supply of goods or service beyond territorial waters and up to exclusive economic zone. Location of supplier in India, place of supply is India but determined under section 13. Then security lending under SEBI, trading in priority sector lending certificate, advances received where you don't know whether it is intrastate supply or interstate supply, then also it will be deemed interstate supply. Just remember these 10 cases, always IGST. In remaining cases, you need to check the location of supplier and place of supply and determine whether it is intrastate or interstate. If it is intrastate, what is the type of liability that you will write in exam? CGST, SGST. If it is interstate, what is the type of liability? IGST. Now, supply beyond territorial waters, okay sir, beyond territorial waters and up to 200 nautical miles, it is deemed interstate. What if the supply takes place in territorial waters? How to determine whether it is intra or inter? For that they are telling, see the nearest coastal state. So look into the next one. Next page, page 73, supply in territorial waters. Supply in territorial waters. What is territorial waters? Up to 12 nautical miles from the baseline is known as territorial waters. And suppose if the supply takes place in territorial waters, either the supplier or the place of supply is in territorial waters, we need to see the nearest coastal state. Nearest coastal state should be taken. Example, say there is a marine engineer. Listen, later you can read that example. So there is a marine engineer. Where is that marine engineer located? In Tamil Nadu. And there is a ship belonging to a foreign citizen, and that ship is somewhere in the Bay of Bengal. Now this marine engineer is going to the ship and to provide the repair services. He traveled towards the ship and he provided the repair services. Is it clear? Now, as per section 13, this is performance based service in relation to goods. Ship is goods, and this is performance based service in relation to goods. Physical presence of the goods required. We need to take location where service is actually performed. But sir, for repairs to ship we have one exception where location of recipient will be taken. I told you 4 exceptions wherein location of recipient will be taken. What are they? Goods temporarily imported for carrying out repairs or any other process and exported after repairs or process without being put to use. Number 2, so that is research or testing on pharmaceutical products. Number 3, repairs to aircraft, repairs to vessel used for business purpose. But here this vessel or this ship is used for personal purpose. That's why this exception will not come, and location where service or actually performed will be taken. See, that is what place of supply chapter is. Place of supply chapter, while listening it will be easy only, but one day itself you will forget. So only when I am telling na, you have a doubt whether I discuss this or not, like that you get a doubt. So that is what you need to revise it. As many number of times as you revise it, you will be able to apply that in the exam. Okay, and even in reality also, every time you cannot depend on ChatGPT na, you understood? Every time you cannot depend on Google, every time you cannot depend on ChatGPT. Little bit knowledge you should be having, because even ChatGPT will fail. That is artificial intelligence. That is not super intelligence. That is not you. That is a labor created by you. You understood? That is just a labor. Okay, so maybe skilled labor we can call, but you are only powerful. You got it? So you should have the knowledge, and that's where you need to revise it. Only when you revise it, once it gets registered na, you will not forget, because there is like a lot of people will tell this, psychologists and all will tell, usually when we see something or when we read something, it will be stored in our left brain, and that has to be moved to right brain. When it is moved to right brain, it seems, so it will be permanent. For example, once you learn swimming, thereafter, so you will not forget it, because you learn it and it will get registered. Cycling, so cycle if you get now, will you drive or not? Will it be possible for you to drive the cycle or not? Possible, because in your childhood you would have cycled it, so definitely it is possible. Like that, certain things we will not forget. Why? Because that is stored. That's what even Gajini movie is also there. Temporary memory loss. Whatever he see, immediately he will forget, because his brain will not be functioning. So don't be like Gajini, you understood? So you read it and push it to the other part of the brain. So when you will push it to the other part of the brain, only when you revise it, you push it to the other part of the brain, so that you will not forget. Okay, so that is the effort you need to put in. So coming back to this, so what is that I was telling? Ship which is in the Bay of Bengal, the marine engineer goes to the ship to do the repair to the ship. Now, what will be taken as a place of supply? Location where service is actually performed. Where the service is actually performed? In the ship. Where is the ship located? In Bay of Bengal, territorial waters. So how to determine the place of supply? So see the nearest coastal state. If the nearest coastal state is, that ship is located near to Tamil Nadu, then place of supply will be Tamil Nadu, and it will become intrastate supply. If the ship goes little bit upward and the nearest coastal state is Andhra Pradesh, then the place of supply will be Andhra Pradesh, and it will become interstate supply. Are you understanding this? So read that example. If a marine engineer registered in Tamil Nadu provides repair services to Mr. Musk located outside India for his ship, not for business purpose, if it is for business purpose, then location of recipient will be taken as place of supply. It is not for business purpose, means personal purpose, located in territorial waters. The place of supply will be the location where services are actually performed, that is location of the ship. But as the ship is in the territorial waters, place of supply shall be the nearest coastal state where the ship is located, and if the nearest coastal state is Andhra Pradesh, then the nature of supply is interstate supply to the marine engineer. If the nearest coastal state is Tamil Nadu, then the nature of supply will be intrastate supply to the marine engineer. Is it clear or not? Then, now I have one doubt, sir. Just now you told if the place of supply is determined under section 13, it will be deemed interstate supply. If the place of supply is determined under section 13, it is deemed interstate supply. Correct? Now here also we are determining the place of supply under section 13. Why? Supplier in India and recipient outside India, then place of supply under section 13. Then how can you say that it is as intrastate or interstate? Because section 9 is a separate section. Section 9 is a separate section, and as per section 9 only you need to determine. So even though the place of supply is determined under section 13, but section 9 overrides any other provision. So read the explanation below. Even if place of supply is determined under section 13, supply in territorial waters may be intra or inter, as section 9 overrides any other provisions of IGST Act. Is it clear? Then next one. What is overriding means? That section will prevail. That is the meaning. Then zero rated supplies, you can see. What are considered as zero rated supplies? I told you already yesterday itself. Export of goods or services, supply of goods or services to SEZ. To SEZ by SEZ, only to SEZ with respect to their authorized operations of SEZ is known as zero rated supplies. In case my outward supply is zero rated, can I take ITC on my inward supplies? Yes. For example, I am exporting. See, listen, I am making this pen, I am manufacturing this pen, and this pen is exempted. If sold in India, this pen is exempted. To make this pen, I will buy the plastic, correct? On which can I take ITC? I am again repeating, carefully listen, concentrate to whatever I am telling. So I am manufacturing this pen. This pen I am selling in India. Now with this exempted, this is exempted. To make this pen, I buy the raw material. Can I take ITC on the raw material purchase to make this pen? No. Yesterday I told you this. That's why I am asking. When my outward supply is exempted, I cannot take ITC on my inward supply. Got it? Now, whatever raw material I buy to make this pen, I cannot take ITC. What if this pen is exported? This pen is exported. Then can I take ITC on the raw material purchased? Yes. So whenever your outward supply is export or supply to SEZ, it becomes zero rated. Whenever it becomes zero rated, you can take ITC on your inward supplies. Now you have two options. Option 1, pay IGST on outward supply by utilizing ITC and get the refund of gross IGST. What does it mean? First pay GST, prove that it is export or supply to SEZ. Whatever GST you paid, you get it as a refund. After proving that really it is exported or supplied to SEZ. So your burden will become zero, correct? I pay pa and I get it as refund. What is my burden? That's why it is called as zero rated. Is it clear? That's why it is called as zero rated. Then next one. Number 2, don't pay anything. Don't pay any GST on outward supply and supply it under bond or LUT and get refund of ITC. That is, whenever I am selling, I will not pay any GST. But at the time of purchase, already I paid GST, that I will get as a refund. Okay. So that is this. Refund with respect to inputs and input service. Then also my burden will become zero. On sale, I am not paying anything. On purchase, whatever I am paying, I will get as a refund. So that's why it is called as zero rated. More detail about zero rated you will be learning at CMA final level. Okay. But at this stage, this much is sufficient. What are zero rated supplies? Then whenever you are exporting some goods upon notified goods, for notified goods you will not get refund at all. What are those notified goods? Pan masala, tobacco and tobacco products, essential oils other than those of citrus fruit. For these goods, neither option 1 nor option 2, means you will not get refund at all. Whereas whenever you are exporting goods upon payment of customs duty, so I told you few exports are subject to customs duty, then in that case you will not get option 1. So what is option 1? Pay IGST and get refund, but you can claim the refund under option 2. Suppose you are exporting exempted goods. If you are exporting exempted goods, you cannot pay IGST, na? Sorry. So export of goods upon payment of customs duty, you will not get option 2, but option 1 is possible. Okay, option 1 is available, option 2 is not possible. Whereas export of exempted goods, a product is exempted. When it is exempted, you cannot pay IGST. So option 1 is not possible. So only option 2 will be available. Okay, in all other cases, either option 1 or option 2 we can follow with respect to each consignment. Now, come back to the previous page. We need to understand the meaning of export of goods and the meaning of export of services. Already I was referring to the meaning of export of goods in customs. What is the meaning of export of goods? Taking goods from India to a place outside India is known as export of goods. Is it clear? Taking goods from India to a place outside India is known as export of goods. In case of export of goods, whether consideration should be in convertible foreign exchange. No, we don't have to bring the consideration in convertible foreign exchange for export of goods. Means the moment you export it, you can claim the refund. However, if you fail to realize the foreign exchange proceeds within the time limit under FEMA, that is Foreign Exchange Management Act, then whatever refund that you have claimed will be payable. Got it? Read it. What is the meaning of export of goods? Taking goods out of India to a place outside India. Is consideration in convertible foreign exchange a condition or not a condition? Not a condition. However, if foreign exchange not realized within the time limit prescribed under FEMA, refund claimed shall be recovered. Okay. Then, in case of export of services, what is the meaning of export of service? Total 5 conditions are there. See there, logically you think where the supplier should be. For export of services, where the supplier should be? In India. Where the recipient should be? Super. And what should be the place of supply? How the consideration should be? Convertible foreign exchange. However, in case of permitted by RBI, the consideration can be in Indian rupees. Where is it permitted by RBI? 2 cases it is permitted by RBI, that it can be in Indian rupees. Services to Nepal and Bhutan. So Nepal and Bhutan are landlocked countries. So when they are landlocked countries, so not necessary that the consideration should be in foreign exchange. It can be in Indian rupees, because basically there Indian rupees only largely circulated than foreign exchange. Okay. Then payment credited in special rupee ostro account maintained by a bank outside India. That is, payment is credited in one ostro account. Indian government will maintain a ostro account with a foreign bank. In that ostro account, if the payment is credited, that is equal to the payment received in Indian rupees. These are the 2 cases the consideration can be in Indian rupees, it's okay. And supplier and recipient are not merely establishments of the same person. Means head office in India, branch office outside India. Will it become export of service? No, because they both are 2 establishments of the same person. So it should be different person. Different person means what? That branch office should be incorporated under the law of that country. Okay, read this. Supply from a company incorporated in India to its establishment outside India, which are incorporated under the law outside India, would qualify as export of services subject to fulfillment of other conditions. Got it? Next. So why I discuss this? Because not all 0 rated supply is export of services. Got it? So the connection we need to understand. Say this. Come back to the last page. Sir, supplier in India and place of supply outside India. So 2 conditions for export of service satisfied. Correct? Supplier in India, place of supply outside India. 2 conditions for export of service is satisfied. Moreover, it is deemed interstate supply. If other conditions is also satisfied, what are the other conditions? Recipient outside India, consideration in convertible foreign exchange or Indian rupees if permitted by RBI, supplier and recipient are not 2 establishments of the same person. If other conditions also satisfied, then it will be coming under interstate, plus it will become export of service. First, why it is interstate? Because supplier in India, place of supply outside India, it is interstate, deemed interstate. And as other three conditions also satisfied, it will become export of service. As it is export of service, it will become zero rated, and we have two options for payment of GST. Are you getting this? Suppose if any one condition not satisfied, is it still deemed interstate? Yes, it is still deemed interstate, but it will not become export. As it is not export, it is not zero rated, then what we need to do? We need to pay IGST. IGST payable unless it is exempted. Then supply of goods or services between SCZ and DTA. So supply to SCZ or supply by SCZ, okay, between SCZ and DTA, if there is any supply. What is the treatment of that? Listen, supply to SCZ, supply to SCZ, supply to SCZ is a deemed interstate, correct? If it is for the authorized operations of SCZ, then it will become zero rated, and two options for payment of GST. Suppose if it is not for authorized operations, for others, no doubt it is interstate, but IGST payable, it will not become zero rated. So because only when you are supplying to SCZ with respect to authorized operations of SCZ, then only it will come under zero rated. Okay. Next, suppose if it is supply by SCZ, supply by SCZ, supply by SCZ, whether it will be treated as zero rated? No, supply by SCZ is only deemed interstate, and we need to pay IGST, but it is not zero rated. Okay. So these points you need to remember. Thereafter, place of supply, already I completed the discussion with you. This section 10, 11, 12, 13, everything we have discussed. Okay. Now look into the next area that we need to learn is about input tax credit. Yesterday I told you that today we will be focusing on completing input tax credits, and say this. Page number 93. Page number 93. First, you need to understand what is the meaning of input tax credit. So, there is a registered person. That registered person is having some inward supplies. Inward supplies means what? Purchases. And whenever he is having some inward supplies, he will pay price plus GST. And whenever this registered person is making some outward supplies, he will get price plus GST. This GST paid on inward supply, for example, he is purchasing and pays 1 lakh plus 12,000. So this 12,000 will be taken as input tax credit. Same way, when he makes some outward supplies, he will receive price plus GST. This GST, say he is getting 1,50,000 plus 18,000. That 18,000 is his gross liability or output tax. Okay. Now always output tax minus input tax is the net liability. Is it clear here? So what is net liability or net GST payable? Gross GST payable. What is gross GST payable? A tax on outward supply minus tax on inward supply. What is the tax on inward supply? 12,000. So 18,000 minus 12,000. So what is the net liability in this case? 6,000. 6,000 will be taken as the net liability on which GST, like GST payable to government, will be 6,000. Now let's try to understand this with the help of a journal entry. You tell me what is the journal entry for this transaction, purchase transaction? Come on. Purchase account debit 1 lakh, ITC account debit 12,000, because ITC is a receivable, it's an asset. That asset you are setting off with your liability, it's a current asset. Current asset means it shows what balance? Debit balance. So purchase account debit 1 lakh, ITC account debit 12,000 to supplier account. How much? 1 lakh 12,000. Then this side. So sales. What is the entry for sales? So recipient account debit. How much? 1 lakh 68,000 to sales 1 lakh 50 to GST payable 18,000. So you can see purchase account debit, ITC account debit to supplier account, recipient account debit to sales to GST payable. Now GST payable shows a credit balance liability and ITC shows a debit balance because it is an asset. Now GST payable account debit to ITC account to GST payable. Okay. So this GST payable account, okay, so we are making a debit to ITC will be 12,000. What is this to GST payable? That is to bank. Actually, it is to bank account. Is it clear? To bank account. Outflow, cash outflow. That cash outflow is 6,000. How this 6,000 we are making payment? So say this. Whatever liability that you have, this 18,000 will be there in your electronic credit ledger. Sorry. So this 18,000 will be there in your electronic liability ledger. This 12,000 whatever ITC you avail. Availment of credit means taking credit. So taking credit is known as availment of ITC. Availment of ITC means taking ITC in electronic credit ledger. How we will avail the ITC? Through GSTR 3B. And utilization of ITC. Utilization means this 12,000 you adjust with 18,000 na, that is called as utilization. Set off with liability. And reversal of ITC. Reversal of ITC means what? Reducing the ITC availed. So whatever we have availed as ITC, that we will reduce it. So that is called as reversal of ITC. So tell me what are the three terminologies? Availment of ITC, utilization of ITC, reversal of ITC. What is availment of ITC means? Taking credit. Where you will take credit? In the electronic credit ledger. How you will take the credit? Through GSTR 3B. What is utilization of ITC or utilization of credit? Set off of credit with your liability. How you will do it? Again in 3B. And reversal of ITC. Reversal of ITC means what? Reducing the ITC already availed. So that is known as reversal of ITC. Again, where we will do reversal of ITC? Through GSTR 3B. Now this is what input tax credit you need to remember. GST paid on inward supply can be availed as ITC and utilized for payment of GST on outward supplies. Therefore, what will be the net GST payable? Gross GST payable minus ITC will be taken as the net GST payable. Now, say this, there are total 3 ledgers which are maintained by GST network on behalf of every registered person. On behalf of every registered person, there are 3 ledgers. One is electronic liability ledger, electronic credit ledger, and electronic cash ledger. What details will be there in liability ledger? Gross GST payable. That is, in this case, this 18,000 rupees is there na. That 18,000 rupees will come in electronic liability ledger. Okay, electronic liability ledger. This is ELL, electronic liability ledger, ELL. Then whatever ITC that you have availed, here you availed some ITC na 12,000. So that will be coming in your electronic credit ledger. And whatever cash that you need to pay, that is 6,000, will be coming in your electronic cash ledger. Is it clear? Now, so see this, how to avail ITC in GSTR 3B. So GSTR 3B is a return that contains the details of outward supplies, inward supplies, liability, everything will be there in 3B. Okay, in 3B you need to avail the ITC. How you will avail ITC in 3B? Based on 2B of the recipient. Okay, so 2B, the inward supply data will be reflected. How 2B data will be reflected? Based on the GSTR 1 of the supplier. So see this, first the supplier will be adding the invoice in GSTR 1 and he will file the GSTR 1. Is it clear? First what supplier will do? He will add the invoice. Which invoice? B2B invoice or B2C invoice? B2B invoice. Because if recipient is unregistered, he cannot take ITC. So definitely recipient should be registered. So add invoice B2B in GSTR 1 and it is filed. As soon as GSTR 1 is filed, based on the GSTR 1 of supplier to the recipient, so details will be auto populated in GSTR 2B. So this is called as matched ITC. Okay, so who will do this? Portal will do. How portal will know? Because the supplier will add the GSTN of the recipient na. So every registered person will have a GST identification number. So based on the GSTN of the recipient, portal will tell, okay boss, you are that recipient and you have purchased, this much is what you have purchased from all your suppliers who they have reported. What they have reported in their GSTR 1, this is the data, like that they will give you one statement. You will not file it, you will get it. You will get it. From where you will get it? From the portal. That is called as auto populated GSTR 2B. Based on GSTR 2B, the recipient will avail the ITC in 3B. So that is called as self-assessed ITC. Got it? But how much can be taken? Whatever is there in 2B can be taken? Yes, but total we need to do this 6 adjustments. Total 6 adjustments we need to do. What are those 6 adjustments? 3 things, even though it is coming in GSTR 2B, but you should not take. What is that? Number 1, blocked ITC. Blocked ITC means there are some inward supplies which are called as blocked credits or ineligible credits or negative list. So even though you are purchasing it, you are getting that inward supply, but you cannot take ITC. That is called as blocked credit. Example, motor vehicles is a block credit. Anyhow, today we are going to learn that. Motor vehicles is a block credit, and then food and beverages is a block credit. Like that we have some blocked credits. You cannot take ITC with respect to that. But portal don't know whether you can take ITC or you cannot take ITC, etc. and all. So it will be coming in your 2B, but you should not take. Is it clear? Even though it is reflected in 2B, but you should not take. Then what you need to do? You need to minus, deduct. Then non-business purpose. You purchase some washing machine for your home, but you gave your GSTIN. So therefore, the supplier will report it as B2B and it will come in your 2B. But can you take ITC? No. Why you should not take ITC? Personal purpose or non-business purpose. So you should not take credit. Then exempted outward supplies. Exempted outward supplies means that is you are purchasing something and you are using it for making exempted supplies. You cannot take ITC, but portal don't know na that you are getting it for exempted, you are using it for exempted or you are using for taxable. So they will be giving in 2B, but you should not take. Got it? So what are the 3 minus pa? Blocked ITC, non-business purpose, exempted supplies. That is inward supply used for exempted supplies. You take out these 3. Then 3 things we need to add. What are they? GST paid under RCM. Whatever GST we paid under RCM means what? We are having some inward supplies on which we are paying GST under RCM, that I can take as ITC, but my supplier might not have reported in GSTR1 because he is not having liability. I am only paying na. My supplier will not report because it is my liability. He will not report. So even though it is not, if it is not reporting in GSTR1 means it will not come under 2B. As it is not coming in 2B, I cannot take ITC in 3B, correct? But even then I can take ITC in 3B. So that is the exception they created. Got it? So whatever GST that is paid under RCM can be availed as ITC, even though not reflected in 2B. Then next one, pertaining to earlier tax periods. What is pertaining to earlier tax periods means? Say right now I am in the month of March and January I made some purchases, but I have not taken ITC in the month of January because of some reason. Now I want to take ITC. So it will be reflected in Jan month 2B or March month 2B or Jan month 2B, but I have not taken in Jan month. Now I wanted to take, but it will not come in this month 2B. Even then can I take? Yes. So pertaining to earlier tax periods, not taken that time, so now I wanted to take. Then reavailment of ITC reversed earlier. What does it mean? First I will avail the ITC. After availing the ITC, because of some reason, some contravention of provisions, I need to reverse the ITC. So I reverse the ITC. Again, I have complied with the provisions, so I can re-avail the ITC. But this information will not be there in 2B, correct or not? So then also I can take ITC. What are the 3 exceptions wherein even though general rule is that only that ITC which is there in 2B only can be availed. So if it is not there in 2B, you cannot avail. Is it clear? However, I can avail in 3B even though not coming in 2B. What are those 3? Number 1, GST paid under RCM, then pertaining to earlier tax periods, reavailment of ITC reversed earlier. These 3 things, okay? First 3 things even though reflected in 2B, but I should not take. Next 3 things not reflected in 2B, but I can take. Is it clear? Now, so this adjustment when I make, then I will get ITC availed in GSTR 3B. Now, let's try to understand why will there be difference between ITC as per books versus ITC as per 2B. You tell me logically, think, why will there be difference between ITC as per your books, that is based on invoices, versus ITC as per 2B. Means your supplier has, very good, your supplier has not filed GSTR1, or he filed GSTR1 but he missed your invoice. You understood? He filed GSTR1 but he missed your invoice. He filed GSTR1, he added your invoice but reported incorrect details in invoice. Instead of 1 lakh, he reported only 50,000. So GSTR1 not filed, or GSTR1 filed but invoice not reported, GSTR1 filed but reported incorrect details. In these cases, it will not come in 2B. So that's why there will be difference in ITC as per books versus ITC as per 2B. Understood this chart here? Clear? Now, when ITC as per 2B is less than ITC as per books, how much can be taken? Only ITC as per 2B is relevant for availment. As and when supplier files GSTR1 or rectifies GSTR1. So what will happen? Suppose if it is not coming in 2B, what you will do? Your recipient I am supplier, I have not filed GSTR1. What will you do? Correct? You will call me and beep, 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 beep. You will scold. Definitely you will scold. Why will not you scold? Definitely you will scold. Because it's your money, na? What other things you are doing, sir? So what is that you are plucking, sir? Like that and all you will ask, and you will ensure that I am filing my GSTR1 or I am rectifying my GSTR1. When I file GSTR1 or rectify GSTR1, what will happen? It will come in 2B. Whenever it comes in 2B, at that time you can take the ITC. Okay, say this. As and when supplier files GSTR1 or rectifies GSTR1, ITC shall be reflected in 2B and that can be availed in GSTR3B. Is it clear? Then next one. Suppose if ITC in GSTR3B, that is whatever I have taken ITC in my 3B is more than the ITC as per 2B. For example, ITC as per 2B 1,20,000. What I have taken in 3B is 1,50,000. Can I take? First of all, can I take? Yes. Only in these 3 genuine cases I can take. Correct? These 3 cases I can take. What are those 3 cases? GST paid under RCM, pertaining to earlier tax period, re-availment of ITC, reversed earlier. These 3 cases I can take and I have taken. Now what will happen thereafter? If ITC in 3B greater than ITC in 2B, a system generated notice shall be given under Rule 88D. Rule 88D. Is it rectified there? Rule 88D. And accordingly reply to be furnished. You understood? So this details related to Rule 88D and other information, it is there in page number 98. Have a look into that. Page number 98. Just turn the pages, you can find. Rule 88D. Can you see that? Rule 88D. Say this. When Rule 88D will come into picture? Whenever you avail ITC in which place? 3B. More than ITC as per 2B. So you will avail ITC in 3B greater than ITC as per 2B. Now, in that case, there will be communication by the department in DRC 1C. One notice you will get. 88D what is the alphabet before D? C. So you will get a communication in DRC 1C. Sir, form numbers if you are not remembering also it's okay, because intermediate level that will not be tested and all. Okay. Just remember when Rule 88D will be applicable. Then, so how they will communicate to you? They will give a notice to you. How they will give notice to you? They will upload in the portal and even email. Thereafter, within 7 days, you need to respond. What is that you need to respond? Either pay the difference. For example, 1,20,000, it is in 2B. How much you avail? It is in 3B, 1,50,000. What is the excess? 30. That you pay. Or explain the reason for difference. What is the reason for difference? Sir, this is pertaining to RCM, or this is pertaining to earlier period I have not taken at the time, now I am availing, or I have to re-avail the ITC reverse earlier. So some reason you tell. So thereby what will happen? They will drop the notice. Suppose you have not replied, or you gave a reply but which they are not satisfied, or you did not pay the difference, then in that case what they will do? They will give another notice under 73, 74. So what are the options available? Pay the difference, explain the difference, partial payment and explain the balance. If not, they will initiate recovery, notice and recovery under 73, 74, and until the time you make the payment, there are 4 consequences. What are the 4 consequences? You are not allowed to file the GSTR 1, means your GSTR 1 will be blocked. Number 2, once GSTR 1 not filed, GSTR 3B also gets blocked. Are you getting this? You are not able to, you cannot file GSTR 1. If you cannot file GSTR 1, even GSTR 3B also gets blocked. And if GSTR 1 not filed for 2 consecutive tax periods, e-way bill facility also gets blocked. Is it clear? E-way bill facility also gets blocked, and there will be suspension of registration. So these are the consequences of not making the payment of the difference. What are the 4 things, pa? Number 1, GSTR 1 will be blocked, GSTR 3B will be blocked, because you are not filing GSTR 1 and 3B for consecutive 2 tax periods, even e-way bill gets blocked, and this will also lead to suspension of registration. Okay, now come back to this page. So hope you understood whatever we have seen in this page 94. Clear? This information clear? Now look into the next one. You need to know few returns. GSTR 1. What is GSTR 1? That contains the details of outward supplies. Only outward supplies will be there in GSTR 1. GSTR 2A. Based on the GSTR 1 of the supplier, data will be reported in GSTR 2A as well as 2B. Both contains inward supply details. 2A also based on GSTR 1 or IFF. Who will file IFF? A person who is under quarterly return monthly payment scheme, QRMP. There is a scheme called as QRMP scheme. Rather than paying tax on a monthly basis, rather than filing returns on a monthly basis, they will be filing returns on a quarterly basis. That is QRMP scheme. They will be filing IFF furnished by every supplier. Recipient can generate a statement of inward supplies in 2A, auto populated from GSTR 1 filed by supplier. 2B also same. 2B is a static month-wise auto drafted statement. For regular taxpayers, it is like 2A but remains static. So what are the differences between 2A and 2B? If you see there, type of document, 2A is dynamic, 2B is static. What does it mean? 2A, whenever supplier modifies anything, in 2A it will get affected. Whereas 2B is static. It is like one Excel sheet which I prepare and send it to you. If I modify the Excel sheet, it will be modified there? No. Whereas if I am sending you a Google sheet, if I modify anything here, that will get modified there. So 2A is like the Google sheet. So dynamic. 2B is not like Google sheet. It is like a normal Excel sheet sent in mail. Got it? So dynamic and static. TDS, TCS details will be reflected in 2A, yes, but it will not be reflected in 2B. So there is a concept of TDS and TCS even in GST. Okay. Then details of invoices if GSTR 1 filed after due date. If GSTR 1 is filed after due date, will it be reflected in 2A? Yes. Even after due date, if it is filed immediately, it will be reflected. But in 2B, it will be reflected in the next month. This month, it will not be reflected. For example, 11th is the due date, pa. If they file it by 11th, it will come in that month 2B. If they file it after 11th and all, it will come in next month 2B. It will not come in this month 2B. So not reflected. However, it is reflected in the subsequent month GSTR 2B. What is the purpose of GSTR 2A? Just for reference. What is the purpose of 2B? For availment of ITC. Then say this. There is a supplier and that particular supplier is filing reporting the details of outward supplies in GSTR 1 or IFF, and it is filed by the due date. Based on that, it is reflected in GSTR 2B of the recipient. Okay. Now this is matched ITC, just now we discussed. So we need to avail the ITC in 3B, which is ITC as per 2B, and these three reflected in 2B are not reflected in 2B, reflected in 2B but ineligible, means we should not take, and these three not reflected in 2B but eligible. Okay, so this adjustment we need to make. Then look into the next one, reversal of ITZ if supplier not filed GSTR 3B. Who not filed 3B? Supplier not filed 3B. Concentrate. First, supplier reports the details in GSTR 1. Supplier added the invoice in GSTR 1 and he filed the GSTR 1 within the due date. Okay, based on this the data will come in GSTR 2B of the recipient. It will come in the GSTR 2B of the recipient. And can the recipient avail the ITZ in 3B? Yes, ITZ can be availed in 3B. Self-assess, they can avail the ITZ. Up to this clear. Now what this supplier did, he did not file the 3B. Who did not file 3B? Supplier. So supplier filed GSTR 1 but he did not file 3B by which date? By September 30th of next financial year. So he can file late. 3B he can file late, but what is the maximum time limit by which he should have filed 3B? Why he will not file 3B? Because at the time of filing 3B he need to pay tax. At the time of filing GSTR 1 he don't have to pay tax. 3B he need to, so he filed in GSTR 1. He don't have tax liability at that time. So he reported, but he need to pay na. When he need to pay? At the time of 3B. So that's why he started postponing filing 3B. But what is the maximum time limit by which he should have filed? September 30th of next financial year. If 3B not filed by September 30th of next financial year, then the recipient needs to reverse the ITZ that he has availed. By when? By November 30. Means how many months time limit is there? Just 2 months time limit. By September 30, October and November, only 2 months time limit is there for him to do the reversal. Sir, how will recipient know that the supplier not filed 3B? How will recipient know that supplier not filed 3B? That data will be made available to the recipient by the portal. So portal will tell, boss, your supplier, this many suppliers have not filed 3B by September 30th. So you need to do the reversal like that. One statement will be made available in 2B itself. Got it? So reversal of ITC after September 30th of next financial year, but before November 30th of next financial year. Now, suppose if 3B is filed after September 30th of next financial year, then what will happen? ITZ reversed earlier can be re-availed without any time limit. Okay, whatever ITZ that is reversed earlier, that can be re-availed without any time limit. Okay. Suppose if you are not reversing by November 30, what will happen? Supplier not filed GSTR 3B by September. So you need to do the reversal by November 30. If you are not reversing by November 30, what will happen? You need to pay interest. See there. If not reversed by November 30 of next financial year, interest at the rate of 18% shall be payable from the date of utilization till the actual date of reversal or payment. Okay. Then what is the meaning of date of utilization for computation of interest? Because interest is computed from which date to which date? Date of utilization till the date of reversal or payment. So what is the meaning of date of utilization? Date of utilization means the month in which the balance in ITZ falls below the wrongly availed ITZ. Because we cannot follow LIFO, FIFO, weighted average, etc. Opening balance will be there, pa. This month we will avail some ITZ. Now which one we would have utilized? You understood my question. You have some opening balance of ITZ. This month also you availed ITZ. Utilized means what? Adjusted against your liability. You tell me which one you would have utilized. Opening balance you would have utilized. ITZ availed during this month you would have utilized. Very difficult to determine. If it is FIFO, FIFO means first in, first out. LIFO means last in, first out. So for this we cannot create a new method. Clear or not? Enough of costing already we have. So why again we need to do? That's why they are telling whichever method you follow, you follow. But see the balance in that month. If the balance in that month falls below the availed ITZ, means to that extent you have utilized. Okay. For example, see the next page. See the next page. Month May 2024. Opening balance 40,000. ITZ availed is 32,000, including wrongly availed ITZ of 12,000. So see the question. ITZ wrongly availed with respect to an invoice issued by supplier for which supplier not filed 3B is 12,000. Okay. Invoice date is 4th May. So May month opening balance 40. How we got opening balance 40? Previous month closing balance. ITC avail 32. In this 32, this 12,000 is also there, okay, and ITC utilized is 50. What is the closing balance? 40 plus 32 minus 50, that is 22,000 is the closing balance. Now tell me, for the month of May, whether the balance in ITC falls below the wrongly availed ITC of 12,000? Yes or no? No. No. Means we have not utilized the 12,000 in the month of May. Then again go to June. June, what is the opening balance? 22,000. What is the ITC avail? 18,000. What is the ITC utilized? 30,000. So 22 plus 18 minus 30. What is the closing balance? 10,000. Means the balance falls below 12,000. To what extent? 2,000. Means 2,000 we have utilized in June month. Is it clear? 2,000 is said to be utilized in June month. Then again go to July. Opening balance 10,000. ITC avail 15,000. ITC utilized 5,000. So 10 plus 15, 25 minus 5, 20,000. So whether the balance falls below, balance increase. Balance increase means reversed, sir? No, no, no. Balance increase does not mean reversed. Not that you are paying to government. Balance decrease means you have utilized. Only when you are actually reversing we need to take, okay. So that's what I have given till the time of actual date of reversal, okay. So now again go to August. What is the opening balance in August? 20. How much avail? 20. How much utilized? 36. Now what is the closing balance? 4,000. Now already 12 came down to 10. Now 10 came down to 4. Means how much you have utilized? 6,000. So each month you have utilized 6,000. August month. So June month you have used 2,000 and August month you have used 6,000. So 2,000 rupees utilized in June and 6,000 utilized in August. Accordingly, GSTR 3B due date or actual date of that month relevant to computation of interest will be taken as the date of utilization. Okay. So say this. First you need to see the month in which balance in ITC falls below wrongly availed ITC. First you need to see the month in which balance in ITC falls below availed ITC. For that month, whatever is the due date of 3B or actual date of 3B, whichever is earlier will be taken as the date of utilization of ITC. Now for June month, when is said to be utilized? For June, whenever you file 3B or due date of 3B, whichever is earlier will be taken as the date. This month. Month date means difference, you know na. Month means the month for which you have utilized. Date means the date for which you have utilized. So what is considered as the month of utilization? June. What is the date of utilization? For June you will file 3B, no. For June you will file 3B. Whenever you are filing the 3B for June, that particular date, okay. So 2,000 utilized in June and 6,000 utilized in August. Accordingly, 3B due date or actual date of such month relevant for computation of interest will be the date of utilization. Is it clear? Next. So that is about this information. Then one more. All these are amendments in the last 1 year. In the last 1 year, 1.5 years, we have got amendments. Okay. So therefore, these are all the areas which definitely they can test. And suppose if liability in GSTR 1 is greater than liability in GSTR 3B. So when there will be this situation, if a supplier filed GSTR 1, not filed 3B, then recipient should reverse the ITC. Supplier filed GSTR 1, not filed 3B, recipient will reverse the ITC, correct? So recipient will definitely take the supplier in the 5th gear. Are you getting this? So recipient will not keep quiet. Recipient will tell, is it your father's money that you are paying? You are paying my money only na. Already you collected from me. You pay like that. Definitely he will take the supplier on ride. So what supplier smartly will do? He will, if he is not filing 3B only, recipient should reverse. He will file 3B. He will file 3B. But what mistake he will do? He will not report full liability. He will report only some nominal liability and file 3B. You understood or not? Supplier filed GSTR 1 pa. For example, he filed GSTR 1 reported liability of 15 lakhs. If he is not at all filing 3B na, definitely recipients will not keep quiet. So he will file 3B. But in that 3B, he will report some 2 lakh liability because he will have only 2 lakhs to pay, so he will report 2 lakhs liability. So he filed 3B so that this section will not come into picture. When this section will come into picture? Only when supplier not filed 3B. So he files 3B. You got it? To avoid this section, he filed 3B. To avoid this section, he will file 3B. That's where another section will come into picture. Another section will come, another provision will come and say, if the person has reported more liability in GSTR 1 but paid less liability in GSTR 3B, he will get a notice and he need to make the payment. Okay, say this. Supplier filed GSTR 1 and GSTR 3B, but liability in 1 greater than liability in 3B. Now, whether recipient is required to reverse ITC or not required to reverse ITC, as per this rule 37A, recipient is not required to reverse any ITC. Is it clear? Because supplier filed GSTR 3B na. Now, a system generated notice will be given to the supplier in form GST DRC 1B within 7 days. What he should do? Same. Either he should pay the difference along with interest or explain the reasons for difference. Suppose if he has not replied or he explained but officer not satisfied, then recovery of such difference along with interest and penalty. Now tell me what is the difference between 88C and 88D. Come on. Rule 88C, 88D. Just now we discussed this rule 88C. 88D already we discussed. What are the differences? Both are same, but situation will be different. What is the situation? When 88C will come, liability in GSTR 1 greater than liability in GSTR 3B. When 88D will come, liability ITC in GSTR 3B is greater than ITC in GSTR 2B. Both cases one notice will come and both cases we need to give reply within 7 days. Got it? And what is that we need to reply? Either pay the difference or we need to explain the difference or partly pay and partly explain the difference. Otherwise what will happen? This is the difference. Otherwise what will happen? So we have few differences. First point is different. First point is different. Then again remaining points and all same. Notice number and all you don't have to remember. This. If no response or unsatisfactory response, in case of 88C, immediately they will recover. No further notice. No further notice. Immediately they will recover. Whereas in case of 88D, another notice they will be giving. Then impact on filing return same. What will happen? Same 4 points. They cannot file GSTR 1. If they cannot file GSTR 1, they cannot file 3B. Consecutive 2 months, if they are not filing 1 and 3B, their e-way bill will be blocked. And also this will lead to suspension of registration. Clear? Now, what is that we have completed so far? Section 41. Only one section we discussed. Section 41. This section 41 read with, so multiple rules we discussed. Rule 36 sub rule 4. Go back. Rule 36 sub rule 4. This rule 36 sub rule 4 says that only matched ITC can be availed. Then we saw rule 37A. Rule 37A says if supplier not filed GSTR 3B by September 30, we cannot avail the, that is we should reverse the ITC. Then we discussed rule 88C and rule 88D. Okay, liability 1 greater than liability in 3B or ITC in 3B greater than ITC in 2B. These 4 rules, 36 sub rule 4, 37A, 88C, 88D. These 4 rules are connected to one section, that is section 41 that we have completed. Now we are moving on to section 49 subsection 5. 49 subsection 5 talks about manner of utilization of credit. Manner of utilization of credit, that is how much credit or which credit can be adjusted against what liability. Okay, that is given in the manner of utilization of credit. Now say this. I have all the credits, CGST credit. So on my inward supplies, I have CGST credit. No need to make note, just listen. And then I have SGST credit, UTGST credit, then IGST credit, and compensation cess credit. Okay, these are the credits that I have on my inward supplies. These are the various credits that I have on my inward supplies. And liabilities, if you see, CGST payable, then SGST payable, UTGST payable, IGST payable, and compensations as payable. Clear? Now, can I utilize CGST credit for payment of CGST liability? Yes. Can I use CGST credit for payment of SGST liability? No. So I can use a CGST credit for CGST, CGST for SGST not possible, CGST for UTGST not possible, CGST for IGST, yes, I can utilize, but for cess I cannot utilize. Then next one, I have SGST credit. SGST credit can be utilized for what purpose? Only SGST and IGST. I cannot use it for payment of others. Then next, UTGST. UTGST can be utilized for payment of what? Only UTGST and IGST. It cannot be used for payment of others. And then IGST credit can be utilized for payment of what? Can be utilized for payment of all. Can be utilized for payment of all except cess. All except cess. And cess credit. This compensation cess credit can be utilized only for payment of compensation cess credit, cannot be utilized for payment of anything else. Okay. So this is the matrix of utilization that you need to know. Now, how to remember this simply? So let's try to learn the easy way in this. If you see IGST credit, there is no restriction with respect to IGST credit. Agreed? So IGST can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Understood? Whereas with respect to other three, that is CGST credit can be utilized for payment of CGST liability, SGST for SGST liability, UTGST for UTGST liability. Cross utilization is not possible, and cess credit can be utilized only for payment of cess credit. Okay, it is no way connected. Even IGST also we cannot use for payment of cess. Now, this you try to remember easily this way, that is, Mr. X is the husband and Mrs. X is his wife, okay, and parents of Mr. X, parents of Mr. X. Mr. X is IGST and Mrs. X is CGST. Parents of Mr. X is SGST and UTGST. Now, he will adjust with his wife will adjust with him. Okay. So, IGST credit can be adjusted with CGST, CGST can be adjusted with IGST, no issue. Whereas, his parents will adjust with him, he will adjust with his parents, no issue. SGST, UTGST with IGST, IGST with SGST, UTGST. But his parents will not adjust with his wife, and his wife will not adjust with his parents. Okay. So always problem will be there. So SGST, UTGST cannot be used for payment of CGST, CGST cannot be used for payment of SGST, UTGST. Is it clear? This is first principle. And sir, what about compensation cess? Compensation cess is like parents of Mrs. X. Okay, parents of Mrs. X. No one will adjust with them. You understood or not? Clear? So no one will adjust with them, because even this girl also, the moment she comes into this family, so she will also not adjust with her parents. So that is this compensation cess. Compensation cess. No one will adjust. They will adjust with them only. You understood? That is this. So this is with respect to first principle. See there, what is that? There is no restriction with respect to IGST. That is, IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Amongst other taxes, respective credit can be utilized for payment of respective liability, and cross utilization is not allowed. Okay. Then second priority, like second principle we are discussing. Now IGST credit. Okay. Now see, listen carefully. Now this Mr. X is having some money. What he will do? First he will use it for his purpose. Then wife or parents are, there is no priority. There is no priority. How can you give priority? So to anyone. So depending upon the situation, like with wife he will go and tell you are only first, parents are next only, like that. To parents he will go and tell you are only first, wife and all came later, like that. Okay. So recently one movie came, Kudumbasthan, like that one movie. He tried to balance, na? So like that, you understood. So first about him, thereafter, wife or parents, any manner, any proportion. So tell me, IGST credit should be utilized first for payment of IGST. Thereafter, CGST, SGST or UTGST in any manner, any proportion. Okay, say this. So first IGST credit for IGST, then CGST, SGST, UTGST. Okay. Next, what about CGST, Mrs. X? First, about her only she will think, correct? Then definitely not SGST, UTGST. Am I right? Next. What about parents? The moment marriage happens, they will also become so selfish. They will think about themselves only first. You understood? Then only IGST. Got it? So see there. So CGST first for CGST payable, SGST for SGST payable, UTGST for UTGST payable, then only IGST payable. Got it? Next. Third principle. Now, money is there here also. But which money will be spent first? Money is there here also. Which money will be spent first? Got it? So that is what you understood. The family circle you understood. IGST credit will be exhausted first before utilizing CGST, SGST or UTGST. Okay, because everyone will fall on this person's money only. Got it? Say this. Before utilizing CGST and SGST credit of IGST should be completely exhausted. We make him zero and then we will spend our money. Got it? Order of utilization of IGST should be followed. Then next. Now say this. This person is having some liability. What he will do? This person is having some liability. First he will pay out of his pocket. Not sufficient. Where he will go? Wife only will stand first. You understood? So many movies you would have seen, when husband is hopeless or husband has lot of problems, wife will come and give bangles, wife will come and give earrings, correct or not? So therefore, Mrs. X, then parents, okay, because otherwise directly if he goes to parents and all, they will spit on his face. Idiot, after marriage also you are coming and standing before me for the sake of your money, like that. Okay, so tell me what is the priority? First IGST credit, then CGST, then SGST or UTGST credit for payment of IGST liability. You will not forget now these four principles. Yes? Then say this. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST or UTGST liability in any proportion. So multiple answers are possible in exam, but depending upon CGST and SGST liability, it should be apportioned. So what does it mean? Say this. Say this question. So compute net GST payable. Compute net GST payable. Compute net GST payable. In this we have CGST, SGST and IGST. Gross liability, gross GST payable. Gross GST payable is 5,000, 5,000 and 5,000. This is the gross GST payable. And ITC available. ITZ available, CGST 2000, SGST 2000, IGST 10,000. Now tell me how to compute the net GST payable based on this data. First, CGST, SGST, IGST. What is the gross GST payable? What is the gross GST payable? CGST will be 5,000, SGST 5,000, IGST 5,000. Okay. Minus which credit we need to use first? IGST credit. In this IGST credit, first it will be utilized for payment of what? IGST. Thereafter, CGST, SGST in any manner, any proportion. Correct? You tell me which way I need to use. Can I use entire 5,000 for CGST? No. If I use entire 5,000 for CGST, I will end up carry forwarding this 2,000 rupees, because what will happen? Suppose if I use entire 5,000, then so we have SGST credit. CGST credit we cannot utilize. Why CGST credit we cannot utilize? Because CGST credit cannot be adjusted against SGST liability. So we need to carry forward. Only SGST credit we will be able to use 2,000. So because of which there will be net GST payable. How much will be net GST payable? Net GST payable will be 0, 3,000 and 0. But this is not the correct answer. How you know that this is not the correct answer? You total the liability, gross liability total you do. Gross liability total you do 5,000, 5,000 and 5,000, 15,000. ITC total you see 14,000. 15 minus 14,000. You should get 1,000 as the answer. So this is wrong. Means what is the mistake that you have done? Entirely you have used. So see the liability. How the liability between CGST, SGST? 3,000, 3,000. Correct? 5 minus 2, 5 minus 2. 3,000, 3,000. So you equally divide. You equally divide between CGST, SGST 2,500 and 2,500. And you deduct CGST and SGST credit 2,000 and 2,000. So what will happen to the answer? 500 and 500. So that will be the correct answer. 500 and 500. Is it clear? So that is with respect to this. And alternative answer also possible? Yes. What is the alternative answer? 1,000, 0, 0 or 0,000, 0. That way also you will get. That's why whenever you do the computation, one more column you add, that is total column. So that even if this answer is not there in the key, but the total will be there in the key, so they will be giving marks. Okay. So that is 15,000 minus 14,000, that will be 1,000. Okay. Is it clear? Total of the gross liability 10,000 and 4,000. So that will be 1,000. Okay. Clear? Now that is what it is. Read it. IGST credit after utilizing for payment of IGST liability can be used for payment of CGST and SGST in any proportion. So multiple answers possible in exam. My view is that depending upon CGST, SGST liability, it should be apportioned. And GST compensation cess, it can be utilized only for payment of GST compensation cess, that I told you. Then look into the next one. Condition for availment of ITC. So there are total 8 conditions for availment of ITC. Only a registered person can avail ITC. Unregistered person cannot avail ITC. Of course, unregistered person, he cannot use that ITC. Unregistered person will not have liability. What is the point in having ITC? Because ITC can be utilized only for payment of liability. If you don't have liability at all, what is the point of ITC? So only a registered person can avail ITC. Number 2, inward supplies on which ITC to be availed should be used or intended to be used in the course or furtherance of business. Means it should be used or intended to be used. Underline that word, used or intended to be used. What is the meaning of intended to be used? Means you are not going to use it now. You are going to use it in future. Even then can you take ITC? Yes. So but in case of section 32, depreciation under Income Tax Act, PGBP. So the depreciation can be claimed on an asset only if the asset is put to use, okay. But in this case, whether you have used it or intended to be used, you can definitely avail the ITC, okay. In the course or furtherance of business, in the course of business for your existing business, furtherance of business means for something which you are going to start in future. Then recipient should be in possession of tax paid document, means they should be having some evidence that they have purchased. What is the tax paid document? Either tax invoice or debit note or ISD invoice. What is ISD invoice? Input Service Distributor invoice. Who is input service distributor? A head office which will take the credit and distribute the credit to the branch office is known as input service distributor, okay. So that or bill of entry. These are the 4 tax paid documents. Bill of entry in case of import, okay. These are the 4 tax paid documents. What are the 4 tax paid documents? Tax invoice, debit note, ISD invoice and bill of entry. Then recipient should have actually received the goods or services, means January month invoice is raised, but February month only goods are received. When they can take ITC? Only in February month. So only when they are actually receiving the goods or service they can take ITC. Then supplier should have furnished the details of invoices in GSTR1, correct? So far we discussed that only. If supplier is not reporting the details in GSTR1, it will not come in 2B. If it is not coming in 2B, we cannot avail the ITC in 3B. So it should be reported by supplier. And also one more point we saw, supplier should have filed the 3B also. Otherwise we will reverse the ITC. By when supplier should have filed 3B? By when? Not November, September 30th of next financial year. Supplier should have paid the tax with respect to such supply within September 30th of next financial year. And recipient should have filed the returns. Recipient should file the return, because without filing 3B, how can you take ITC? So you should file the return. And GST paid on inward supply reflected in 2B under ITC available should not be restricted. In 2B, there are 3 columns. I'll just show you how 2B will look like. You can see this. So in returns, GSTR 2B, so this is the portal. In this portal, the 2B will look like this. In this there are 3 columns you can see: ITC available, ITC not available and ITC reversal. What is ITC available? Means that much you can take. For example, here whatever numbers are there, that much you can take. This is based on your suppliers GSTR1. Suppose if it comes in ITC not available. Why ITC not available? Maybe your supplier has not filed some, he would have filed GSTR1, but he would have done some contraventions. He filed GSTR1. If he is not filing GSTR1, first of all, it will not come in 2B. He filed GSTR1, but he has not complied with certain provisions. Because of that, maybe he defaulted in payment of tax, etc. and all. It will come in ITC not available. So which means you cannot take. But when you can take, so whenever supplier complies with the provision, it will go to ITC available and we can take. Got it? Then ITC reversal. ITC reversal when supplier not filed 3B. Supplier not filed 3B. That data will be reported in ITC reversal. So we need to see this after September 30th. Correct? After September 30th of next financial year. So then you will know how much you need to do the reversal. Understood? These are the 3 things that we have. Now what is it they are telling? GST paid on inward supply should be reflected in 2B under which place? ITC available, ITC not available? ITC available. Then only they will be taking. What if it comes in ITC not available? They cannot take. Now you remember these 8 conditions like 2, 3 and 3. First 2 basic conditions. Who can take ITC? Only registered person can take ITC. And on what they can take ITC? Inward supplies which are used or intended to be used in the course or furtherance of business. Then 3 conditions to be satisfied by supplier. Number 1, supplier should have reported the details in GSTR1 and supplier should pay the tax by September, that is file 3B by September 30th of succeeding financial year. and supplier should not have no contravent, so that the ITC should be coming in to be under ITC available. These three in the hands of supplier, correct? Next three in the hands of recipient. What is that? Recipient should be in possession of tax paid document. Recipient should have actually received the goods or services, and recipient should have filed the GSTR 3B. Okay. So this can be asked as a 7 marks theory question. So what are the conditions to be satisfied for availment of ITC? You need to write all these points. Okay. Just don't write like this. Little bit you explain also. 7 marks pa. Okay. So don't just complete in half a page. So write little bit explanation you write. Okay. Next. What is the meaning of input tax? Input tax means CGST, SGST, UTGST or even IGST paid under FCM or under RCM. So whatever GST we pay under RCM, can we avail it as ITC? Yes. Whatever GST we pay under RCM also can be availed as ITC. It also includes tax paid on reverse charge basis and IGST charged on import of goods. On import of goods, whatever IGST paid also can be availed as ITC. But it does not include tax paid under composition scheme. So first of all, a person who is opting for composition scheme should not charge GST to us. Even if he charges GST to us, because he should pay out of his pocket. If he charges GST to us, we cannot avail it as ITC. Okay. So it does not include tax paid under composition levy. Then look into this, contents of invoice for availing ITC. So if the invoice does not contain all the specified details, generally a document should contain, invoice means it should contain lot of details. It should contain description, it should contain HSN, it should contain SAC, it should contain address of the supplier, address of the recipient, all those details. But if there is a piece of paper, that piece of paper contains these minimum details, still it is called as invoice for availing ITC. What are those minimum details that should be present? GSTN of supplier, GSTN of recipient, then description of goods or services, value, tax and place of supply in case of interstate supply. Okay. If these minimum details are present, that is sufficient to be called as invoice, we can avail ITC. So description of goods, of course date should be there, description of goods, total value, amount of tax, GSTN of supplier and recipient and place of supply in case of interstate supply. Now look into this. What is the meaning of inward supplies? Inward supplies means it can be inputs or input services or capital goods. What is capital goods? Those goods which are purchased and capitalized in the books of the registered person is known as capital goods. For example, if I capitalize the goods purchased, it is capital goods. If I charge it to P&L, then it will be inputs. Any services received will be coming under input services. Okay. Then look into this concept of deemed delivery. What is this deemed delivery? When the goods are delivered to one person but invoiced to another person. So bill to ship to. Yesterday we discussed, I am delivering it to one person but I am raising invoice to you. Now generally you cannot take ITC. Why you cannot take ITC? One of the conditions for availment of ITC is that you should have actually received the goods or services. Even that person also cannot avail ITC because the invoice is not in that person's name. Are you getting this? Then how the ITC can be availed in this case? For that they have brought in a deeming fiction. The date on which the shipping address has received the goods or services is deemed that the billing address has received the goods or services and the billing address can take ITC. Read that. When the goods are delivered to any person. Who is that any person? Shipping address. Or service are provided to any person on the instructions of the recipient. The date on which such person has received the goods or services, it is deemed that recipient has received the goods or services and recipient can take ITC. Got it? Next. So therefore in case of bill to ship to transaction, billing address can take ITC. Then when goods are received in last or installments, how the ITC can be availed? When the ITC can be availed? Only on receipt of last lot. For example, I am a manufacturer and you are an automobile dealer. I am manufacturer of automobiles. You are placing an order for 100 bikes. But 100 bikes I am not delivering in the same month. First month 40 bikes I deliver, next month I deliver 30 bikes, thereafter next month I deliver 30 bikes. Now, how you can take ITC on this 100 bikes? All 100 bikes you can take ITC only in the third month. So, first month 40, second month 30, third month 30, not possible. Only on receipt of last lot or last installment you can take ITC. See this, ITC shall be availed only on receipt of last lot or installment of goods. Then next one, reversal of ITC for non-payment of consideration to supplier. Listen, I am supplier, you are my recipient. You have not made payment to me. Can you avail ITC? Anywhere in the conditions we have that recipient should make payment to supplier, only then recipient can avail ITC. We have not come across now in that 8 conditions. Check. In that 8 conditions, anywhere it is given that recipient should make payment to supplier, only then recipient can avail ITC. Nowhere it is. So which means you have not made payment to me. Can you take ITC? Yes. Even if you have not made payment to me, you can take ITC. Carefully listen. But the problem is, you should make the payment to me within 180 days from the date of invoice. Otherwise, so much of the ITC that you have availed needs to be reversed along with interest at the rate of 18% per annum. You got it? So, if the recipient has not made payment to supplier within 180 days from the date of invoice, so much of the ITC availed by recipient needs to be reversed along with interest at what rate? 18%. From which date to which date? From the date of utilization till the date of reversal. Okay, say this. If the recipient has not made payment, value plus tax to supplier within 180 days from the date of invoice, then so much of the ITC proportionate to the amount not paid to supplier availed by recipient shall be reversed along with interest at 18% per annum. From which date to which date? From the date of utilization of ITC till the date of reversal. Suppose if you have not at all utilized ITC, whether reversal of, whether interest will come? No. However, interest not payable if availed ITC is not utilized. Now, carefully listen. You have made payment of 60% to me within 180 days. 40% you did not pay within 180 days. So, how much you need to reverse? Proportionate to 40%. Okay. So, that is what it is. Then so much of the ITC proportionate to the amount not paid. Underline that. Proportionate to the amount not paid. Proportionate to the amount not paid to supplier needs to be reversed. Okay. Then next, this proviso is not applicable in case of above proviso not applicable to supplies covered under RCM. So, under section 9 subsection 3. Okay. So, what is that? Whenever recipient is liable to pay GST under RCM, so he don't have to make payment to supplier, he has to pay tax to government. Na? That's why they are telling, no, in case of RCM this is not applicable. Then supply without consideration, 7(1)(c), consideration itself is not there, wherefrom recipient will make payment to supplier. So, therefore, 7(1)(c) also this 180 days condition not applicable. Then payment made to some other person on behalf of the recipient, on behalf of supplier. On my behalf, you already incurred the expenditure, means already you spent, then you don't have to pay money to me. You got it? So, 3 cases: supply covered under RCM, supply without consideration, payment to third party on behalf of supplier. In these 3 cases, no need to comply with this 180 days condition. ITC can be re-availed. Say 180 days you have not made payment, so you reverse it. Again, as and when you make the payment, you need to re-avail. So, ITC can be re-availed as and when payment is made to supplier after 180 days, but interest paid cannot be re-availed as ITC, and there is no time limit for re-availment. There are 2 places where we come across re-availment. Can you tell me? This is rule 37. One more place, rule 37A. First, this, if recipient not made payment to supplier within 180 days, then the recipient should reverse the ITC. As and when the payment is made, the recipient can re-avail the ITC. That is rule 37, this rule. Rule 37A, what is that? If supplier does not file GSTR 3B by September 30th of next financial year, recipient should reverse the ITC, and as and when supplier files 3B, recipient can re-avail the ITC. These are the two places where we have re-availment, and both the places, you know what is common, there is no time limit for re-availment. So generally there is a time limit for availment of ITC, but in this case time limit is not applicable. Got it? And moreover, it may not be reflected in 2B, but even then we can take ITC. Is it clear? Then look into the next one. ITC not available in case of depreciation computed on GST component. Suppose if depreciation is computed on GST component, ITC cannot be availed. What does it mean? It means that suppose we are purchasing a capital goods for 10 lakhs and GST on the same is 1,20,000. If depreciation is computed on 11,20,000, 10 lakh plus 1,20,000, 11,20,000, then ITC with respect to 1,20,000 is not available. Why? Because in section 32 you have computed depreciation on tax component. This point is there in section 32 also, which says that if you avail the ITC, it should not be added to the cost in the WDV of the block. Is it clear? Usually what we will do in case of section 32, opening WDV, add purchases or addition minus sale or disposal. Now you will get the closing WDV. On that closing WDV you will compute the depreciation. Now while doing the depreciation under section 32 of Income Tax Act, so this addition you are taking now, in this example how much you need to add? 10 lakhs or 11 lakh 20? 10 lakhs. If you add 10 lakhs, then this 1,20,000 you can take as ITC in GST. If you add 11,20,000, then that 1,20,000 you cannot take ITC in GST. Is it clear? Because already you are enjoying the benefit called as depreciation. What is the advantage of depreciation? Profit will decrease, means income tax liability gets reduced. Then look into the next one, time limit for availment of ITC. What is the time limit for availing ITC? There is a time limit, 30th November of succeeding financial year or date of filing annual return, whichever is earlier. In 5 places we will come across this time limit. Number 1, time limit for availment of ITC. Time limit for issuance of credit note to be given, that time limit also same. Time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, time limit for rectification of GSTR 8. GSTR 8 is a TCS return. In these places the time limit will be same, 30th November of next financial year or date of filing annual return, whichever is earlier. Due date of filing annual return or date of filing annual return? Date of filing annual return. Okay. Then, but time limit is not applicable in case of re-availment of ITC reversed earlier. Then look into next. There are 2 circulars, 2 clarifications. First one, in case of debit note, whether we need to see the debit note date for availment of ITC or invoice date for availment of ITC. Debit note date. Say this. In case of debit note, availment of ITC depends on the debit note date, but not the date on which invoice related to such debit note is issued. Got it? Then in case of RCM, when can we take ITC? Now there is an amendment, that is whenever supplier is unregistered, he will not give invoice to the recipient when the transaction is covered under RCM. Again I am repeating carefully, listen. I am a supplier, say I am an advocate and you are my client, business entity. Generally advocate service is covered under RCM. So advocate is unregistered, not required to give invoice. Now in that case there is a provision which says the recipient should give invoice to the supplier. Generally who will give invoice to whom? Supplier will give invoice to recipient. But in case of RCM, recipient should give the invoice to supplier. What is the time limit within which the invoice should be given? Within 30 days from the date of receipt of goods or services. So whenever you receive the goods or whenever you receive the service, within 30 days you need to give invoice to me. So whenever you give invoice, based on that only you can take ITC. Generally GST paid under RCM can be taken as ITC na. So see the amendment. In case of RCM, where the registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. Got it? Next. So time limit for availment of ITC for certain financial years. So this point may not be tested, but it is there in Finance Act. So see this, for financial year 17-18 to 2021, financial year 17-18 to 2021, people have availed the ITC late at that time. People have availed ITC late at that time, and that particular ITC claim was rejected. That particular ITC claims were rejected. Thereafter, Supreme Court interfered and said, no, you should give. That's the reason why they brought in a provision now. For financial year 17-18 to 2021, if they have availed the ITC by 30th November 2021, but it has been rejected at that time, now you need to give the credit to all those people. Okay, so that is this. For financial year 17-18 to 2021, if ITC is availed beyond time limit under 16.4, but up to the 3B filed by November 30, it is allowed, even though it is in violation of section 16.4. So this is because of the Supreme Court judgment, they are giving the ITC now for those financial years. Time limit for availment of ITC in case of revocation of cancellation of registration. Carefully listen. First, we will be, our registration gets cancelled. Our registration gets cancelled on one day. When our registration gets cancelled, we will make an application for revocation of cancellation. Carefully listen. Say, financial year 2024-25. For financial year 2024-25, what is the time limit for availment of ITC? What is the time limit for availment of ITC? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Correct? Say 30th November 2025 is the time limit for availment of ITC. Time limit for availment of ITC. Okay. Now carefully listen. What happened somewhere from 1/10/2025 to 31/12/2025, your registration got suspended or cancelled. Cancellation of registration. Cancellation of registration. Is it clear? Between what period, pa? 110 to 31/12. 110 to 31/12, your registration got cancelled. This period your registration got cancelled. So the time limit for availment of ITC falls in this period. So you could not avail the ITC. Is it clear? You could not avail the ITC. And what they are telling, as you could not avail the ITC for this period, so after this 31st December 2025, you will make an application for revocation. Application for revocation. Application for revocation. That application for revocation is, say, on 15 January 2025, you are making application for revocation. Thereafter, revocation order granted. Revocation order granted on 25th of March 2025. They granted revocation order. You understood up to this? Again I am repeating. For financial year, sorry, all this is 26 na. Say this. Financial year 24-25, the time limit for availment of ITC is 30/11/2025, but this period we could not take ITC. Why we could not take ITC? Because from 1/10 to 31st December, our registration got cancelled, and therefore 31/12/2025, from there, that is, this is the date on which we got the cancellation order. 31/12/2025 is the cancellation order. We got the cancellation order. Thereafter, we will make an application for revocation. Revocation means what? Withdrawal. Withdrawal of cancellation order on 15/1. Thereafter, they gave the revocation order on 25/3/2026. Got it? Now, can we avail the ITC for this financial year? Yes. So, within 30 days from revocation order. What is 30 days from revocation order? What is 30 days from revocation order? 30 days from revocation order is 24/4/2026. This is the time limit by which ITZ can be availed. Is it clear? ITZ can be availed. ITZ can be availed. You understood? So what is the time limit by which ITZ can be availed in case of revocation of cancellation? The regular time limit. What is the regular time limit? 30/11/2025 or 30 days from revocation order. What is 30 days from revocation order? 24/4/2026. Whichever is earlier or later? Later, not earlier. Whichever is later. You read this. You read this. Registered person can claim ITC on such invoice or debit notes in any return filed within regular time limit or 30 days from revocation order, whichever is later. This is the time limit for availment of ITC in case of revocation of cancellation of registration. Got the clarity? So please make note of this chart. Done? So this being an amendment can be tested. What is the procedure for availment of ITC? Just remember this. We need to make application by 7/4. That is these two ITCs if you want. This is for the earlier periods also this is applicable because it's a retrospective amendment. For earlier periods also it is applicable. If you want to take ITC, you need to make an application by 7/4 and if satisfied, officer satisfied within 3 months will pass a rectified order or will reject the application. Just two things you need to remember. So by 7/4 we need to make application and within 3 months if satisfied or not satisfied, if satisfied they will pass a rectified order, if not satisfied they will do the rejection of application. Then we have apportionment of credit that we will see after break, but there is one question related to this. So kindly look into this question. So far whatever we discussed on section 16, that is condition for availment of ITC, we have completed two sections. Section 41, that is availment of ITC, sorry, three sections we discussed, section 41, 49 and 16. 41 availment of ITC, 49 utilization of ITC and section 16 condition for availment of ITC. On condition for availment of ITC you may get a question like this. Look into page 114, you can see one question. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A GST 1 lakh. One invoice on which GST payable was 10,000 is missing. Can we take ITC on this 10,000? Why? One of the condition for availment of ITC is that person availing ITC should be in possession of tax paid document. So as the invoice is missing, he cannot take ITC. So only 90,000 can be availed as ITC. Second point, inputs B, 50,000. Inputs are to be received in 2 installments. First installment has been received in October. So this is the October month for which we are determining. Can we take ITC? Why? We can take ITC only on receipt of last installment. So therefore this month we cannot take any ITC. Then next, capital goods. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. So can we take ITC? No, because they are computing depreciation on value inclusive of GST. So ITC not available. Then input services 2,25,000. Listen, one invoice dated 21/2023. 21/2023 means which financial year? Financial year 22-23. Correct? Not 23-24. 22-23. For financial year 22-23, what is the time limit for availment of ITC? 30th November 2023 or date of filing annual return. For financial year 22-23, annual return was filed on 15 September 2023. So 15 September 2023, whichever is earlier. Which is earlier? 15/9. But right now we are in which month? October month. So we cannot take ITC on this 50,000. Means 2,25,000 minus 50. That will be only 1,75,000. So we can avail ITC on 90 plus 1,75,000. 2,65,000. Like this they may give a question. Okay. Fine. We'll take a break. We'll meet at 11:15. And we will continue with apportionment of credit. Okay. Okay, we will start. Look into section 17. So we have so far completed section 41, availment of ITC, 49, utilization of ITC, and 16, condition for availment of ITC. 17 is apportionment of credit. In that, 17 subsection 1, 17 subsection 2 and 17 subsection 3 says that if inward supplies are used exclusively in taxable outward supplies, that's what I have been telling multiple times. When my outward supply is taxable, I can take ITC on my inward supply. When my outward supply is exempted or non-business, I cannot take ITC on my inward supply. Means when my outward supply is either exempted or personal purpose I have used, I cannot take ITC. If inward supply used for both taxable and exempted outward supply, can I take ITC? Yes, I can take proportionate ITC. You tell me what proportion I can take ITC? Proportionate of what? Proportionate of taxable. For example, say this. I have some inward supplies. Wherein the value of the inward supplies, that is purchases or inward supplies is 1 lakh. Inward supplies is 1 lakh excluding GST at 18%, and my taxable turnover is say 40 lakhs and my exempted turnover is 20 lakhs. Now, can I take ITC fully? No, I cannot take ITC fully because this inward supply is common for both taxable turnover and exempted turnover. So what is the proportionate ITC that I can avail? What is the proportionate ITC that I can avail? Rupees 1 lakh into 18%, correct? Rupees 1 lakh into 18%, 18,000 into, to what extent I can take ITC? 40 by 60. So taxable divided by total. So 1 lakh into 18% will be 18,000. 18,000 into 40 by 60, that will come to 12,000. So 12,000 can be availed as ITC, proportionate ITC. Is it clear? So the proportionate ITC will be 12,000 rupees. So that's how we need to do. Same way, if inward supply is used for both business and non-business purpose, what I can do? I can take the proportionate ITC. For example, 60% for business, 40% for non-business. How much can be taken? 60% can be taken. Can you remember these 4 points? Inward supply used for exempted outward supply, we cannot take ITC. Inward supply used for taxable outward supply, we can take ITC. Inward supply used for both taxable and exempted outward supply, we can take proportionate ITC. Same way, inward supply for business purpose, we can take ITC. Inward supply for non-business purpose, we cannot take ITC. Inward supply common for both business and non-business purpose, we can take proportionate ITC. Now where we will keep zero rated supplies? Under taxable supplies or exempted supplies? Taxable supplies, because I told you just today only. What is that? Zero rated supplies are exports of goods or services or supply of goods or service to SEZ, which should be treated as taxable so that we can avail the ITC. So zero rated supplies will be covered under taxable supplies for the purpose of availment of ITC. Then next, we need to remember the meaning of exempted supplies. There are total 8 points which are treated as exempted supplies under ITC. So generally the meaning of exempted supply for payment of GST is 3. Notified as exempted, nil rated, non-taxable. Government from time to time will be giving notification exempting certain transactions, that is called as notified as exempted. Nil rated means the rate of GST is nil. Non-taxable, okay, non-taxable means alcoholic liquor for human consumption and petroleum products. These 3 are treated as exempted for the purpose of payment of GST. However, for ITC purpose also, these 3 are covered. First 3 you see, supplies notified as exempted, nil rated, non-taxable. These 3 are treated as exempted even for ITC computation. Apart from that, there are some more transactions also. Carefully listen. 4 transactions which are actually not a supply but treated as exempted supply for ITC purpose. What are they? Sale of land. Sale of land is not a supply. It is excluded from supply. No need to pay GST. But for computation of ITC, it is treated as exempted supply. Same way sale of building. Sale of building is not a supply, but for the purpose of computation of ITC, it will be treated as exempted supply. Sale of land, sale of building, and sale of securities. So securities also neither goods nor services, but for the purpose of ITC, it is treated as exempted supply. Then supply of warehoused goods under customs. That is, I have imported the goods, kept in the warehouse, and then I am selling it to another person. That another person will clear the goods. On the first day of the class, we discussed na. So Mr. A will import, keep it in the warehouse, then it will be sold to Mr. B. Okay, that case. So in that case also, it is not a supply, but treated as exempted supply. So 4 transactions you see here: sale of land, sale of building, sale of securities, supply of warehoused goods under customs. These 4 are actually not a supply, but treated as exempted supply. What should be taken as value? In case of land and building, you need to take stamp duty value. Okay, usually in income tax also we take stamp duty value only na. Then in case of securities, what we need to do? 1% of sale value of such securities. In case of warehoused goods, whatever is the price at which it is sold should be taken. Then one more. So first 3 points: notified as exempted, nil rated, non-taxable. Next 4 points: sale of land, sale of building, sale of securities, supply of warehoused goods under customs. Then one more point: supply covered under RCM. When my outward supply is covered under RCM, it will be treated as exempted. So that is this, supply covered under RCM. And so even though it is taxable, actually it is taxable, who will pay? Recipient will pay. But for supplier it is treated as exempted supply, so they cannot take ITC. These 8 points you need to remember, because it can be asked as a theory question. So what are the various exempted supplies like that? For the purpose of ITC, they can make a 7 marks question. So you need to remember these points and you need to write. Okay. Then, so what is this sale of warehoused goods? Includes sale of goods by a duty free shop in the international airport. See this, there is a duty free shop in the international airport. What the duty free shop will be doing? Selling goods to the people. Okay. Now to whom they will sell? Either to the outgoing passengers or to the incoming passengers. If they make sale to the outgoing passengers, it will be treated as 0 rated supply. So they will get the refund of ITC. Suppose if they are making sale to incoming passenger, it is excluded from supply, not a supply, because it is treated as sale of warehouse goods under customs, because duty free shop is like a warehouse under customs. So even though it is not a supply, but it is treated as exempted supply, which means whenever they buy anything within India for sale to outgoing passengers and incoming passengers, so proportionate to sale to incoming passenger, they cannot take ITC. Proportionate to sale to outgoing passenger, they can take ITC. For example, inside international airport, Ramraj Cotton, like that one duty free shop is there, and they will be selling cotton garments, shirts, dhotis, etc. to incoming passengers as well as outgoing passengers. So that shop, Ramraj Cotton, will be purchasing the garments in India. Okay. Now say 60% they are selling to outgoing passengers, those who are leaving. Now can they take ITC for that? Yes, even they can get the refund also. 40% they are selling to incoming passengers, like lot of people who are coming from abroad, when they are going to visit some old people in India, so they will be buying these dhotis, shirts, etc. because to give as a gift. So they will buy this, because they will not buy there and bring, they will be buying here and they will be gifting it. So now in that case 40% sold to incoming passengers. With respect to this 40%, can the shop take ITC? No, shop cannot take ITC. Got the clarity with respect to this? Then next, there are 2 transactions which are actually exempted. These 2 transactions are actually exempted for payment of GST, but for ITC purpose it will be kept under taxable turnover, so that we can take ITC. Okay. What are those 2 transactions? Interest on loans, advances, deposits. Service by way of accepting deposits, extending loans or advances, in so far as the consideration is represented by way of interest or discount. So remember, interest on loans, advances, deposits. Interest on loans, advances, deposits is treated as exempted for payment of GST, but for ITC purpose it will be treated as taxable. So thereby we can take ITC with respect to that. Then same way, sale of duty credit scrips. In customs there is a concept of duty credit scrips. Sale of the duty credit scrips is also actually exempted for GST, but for ITC purpose we need to keep it in which place? Taxable turnover. So what are the two transactions which are actually exempted but classified as taxable while doing ITC computation? Interest on loans, advances, deposits, and sale of duty credit scrips. Then there is a special provision for banking company, financial institution and NBFC. So what is that? Either they can take proportionate ITC. Proportionate ITC means just now we discussed that is proportionate ITC. Why for bank? Because bank will have two types of income, interest income and other income. Interest income for a bank will be exempted, but other income for the bank will be taxable. So which means full ITC they cannot take. They can take only proportionate ITC. So proportionate ITC option or option 2, avail 50% of the eligible ITC. Means whatever is their eligible ITC, flat 50. Means assumption is what? 50% of their income is exempted and 50% of their income is taxable. With that assumption, we will take 50% ITC. Is it clear? So what are the two options available to bank, financial institution, NBFC? Proportionate ITC option or 50% ITC option. If it is proportionate ITC option, just now we did not proportionate total ITC into taxable divided by total, that much they can take. 50% ITC means flat 50% they can take. But when they need to decide this option, option 1's exercise cannot be withdrawn during remaining part of the year. Means yearly they need to decide this option. Okay. Then one more point you remember, if they go for proportionate ITC option, if they have inward supply used for taxable outward supply, they can take full ITC. If they have inward supply used for exempted outward supply, they cannot take ITC, and all others they will take proportionate ITC. Is it clear? That is common or inward supply from distinct person. Whereas under 50% ITC option, there is a slight change. What is that? Inward supply used for taxable also 50%, inward supply used for exempted also 50%, common also 50% they will take. You understood? Means everything treated as common. Everything treated as common and they will take 50% ITC. Whereas inward supply from a distinct person means what? Another branch. So they will be taking full ITC, 100% ITC. Understood? That is with respect to this. And we have blocked credits. Now so far whatever we have discussed, I am just showing you from your study material, so you will understand as to what are all the concepts that we have seen so far. So we started with input tax credits. In this we saw introduction to ITC, then these definitions and all are there. Then eligibility and condition for taking input tax credit we have seen, and in this there is one example. You have a look into this example 31. A consignment of coal is to be dispatched from Kolkata to Mumbai using 5 trucks. An invoice was issued to the recipient on March 30. What is the date of invoice? March 30. 4 trucks reached the claimant by March 30, 2024, but the truck carrying the final lot of the consignment reached the recipient only on April 2, 2024. In this case, the input tax credit for the entire consignment, when they can take April or March? April. Why? Only on receipt, not last. It is not lots. Correct. Final lot. Final lot reached only on April 2nd. So therefore they can take ITC only in the month of April, because on receipt of last lot. Then another example you see, same page. H Traders, a dealer in furniture located in Maharashtra, receives an order from R Traders, also located in Maharashtra. The order for supply of 50 tables with an instruction to ship the table to P Hardwares located in Kolkata. P Hardware is a customer of R Trader. There are two parts to this transaction. First part is between H and R, then next part is between R and P. So who will take ITC in the first case? Even though invoice is raised to H and goods are delivered to R, but H only can take ITC. Correct? H Traders receives an order from R Traders located in Maharashtra, but the goods are delivered to P Hardware. So then R Traders only can take ITC. So P Traders, even though they have received, but R Traders only will take ITC with respect to that. Then example 33, Mr. Vikram acquired a laptop of 1 lakh plus GST 18% for his professional use from X Limited. So how much ITC can be availed? So 9% CGST, 9% SGST, 9,000 is available or not available? Available, but for that the supplier should have paid the tax to government by September 30th of succeeding financial year. Okay, that point only they have given. Then example 34, Mr. Vikram acquired a laptop 1 lakh plus GST 18% for his professional use. He has following two options. So asset 1 lakh, depreciation 40%, that is 40,000, closing WDV 60,000. Now can he take ITC? Yes. Why he can take ITC? Because depreciation is computed only on value excluding GST. Suppose if we compute the depreciation on 1 lakh 18,000, can he take ITC? No, he cannot take ITC. Then next one, this apportionment of credit, you look into this example 35. Mr. Akil, registered person, provides the following information for the month of March 2025. Input tax credit in respect of inward supply 2 lakhs, taxable supply excluding zero rated 10 lakhs, export zero rated 5 lakhs, and exempt supplies 3 lakhs. Inward supply on which he need to pay tax under RCM 2 lakhs. Now tell me, what is the ITC? What is the ITC? Input tax credit on inward supply 2 lakhs. Okay, 2 lakhs na. And how much he can take ITC with respect to the 2 lakhs? How much? Into 10 or 15 or 15. Yeah, taxable turnover is how much pa? Taxable and export both should be taken as taxable turnover na. How much is the taxable turnover? 15 lakhs. 15 lakhs. Then what is the ITZ? What is the ITZ? 2 lakhs. And what is the exempted turnover? Exempted turnover will be 3 lakhs. Okay. So exempted turnover will be 3 lakhs. So proportionately they will be able to, 1 second, even supply covered under RCM is also treated as exempted, correct? Supply covered under RCM. So these two will be coming under exempted turnover. We discussed now supplies which are covered under RCM. See this, supply covered under RCM is also treated as exempted supplies. So because of that reason. So what is the exempted turnover? Exempted turnover will be 5 lakhs. Now what is the total turnover? 20 lakhs. Now tell me how much is the proportionate ITC that is available? 2 lakhs total ITC into taxable turnover. What is the taxable turnover? 15 divided by total, that is 20. 2 lakhs into 15 by 20. 2 lakhs into 15 by 20. How much? 1,50,000 can be availed as ITC, proportionate ITC. Is it clear? So like this you may get a question. Then we are now moving on to blocked ITC. So these are the questions they have given so far related to the discussion. Now look into blocked ITC. Blocked credits means what? Blocked credits means these are ineligible credits on which you cannot take ITC. Blocked credits are broadly divided into 3: motor vehicle related blocked credit, and then we have construction related blocked credit, and lastly other blocked credits. These are the 3 divisions, and just listen to it. So in exam, whenever you get a question based on this, you need to arrive. If it is a block credit, ITC not available. If it is not a block credit used in the business, we can take ITC. Okay. So even though this block credit is used in business, we cannot take ITC. Motor vehicles are divided into 3. Motor vehicle for transportation of persons, vessels and aircrafts, and other motor vehicles. Other motor vehicles, example trucks and lorries, always ITC available. Motor vehicles which are used for transportation of persons, means 2-wheelers, 3-wheelers, 4-wheelers, buses, everything will come under for transportation of persons. In that it is divided into 2. Capacity does not exceed 13 and capacity exceeds 13. Capacity exceeds 13 means buses, ITC available or not? Yes, ITC available. Example stage carriage, contract carriage, etc. ITC available. Suppose if capacity does not exceed 13, ITC available or ITC not available? ITC not available. However, there are 3 exceptional cases where ITC is available. That is further supply. Further supply means what? I am buying and selling, or I am buying and renting. So I can take ITC. Used in the business of transportation of passengers, I can take ITC. Or imparting driving skills, I can take ITC. Now listen, there is a cost accountant who purchased a car for use in his profession, for use in his business or profession, and can he take ITC on the car purchase? Car is a motor vehicle for transportation of person, capacity does not exceed 13. Is it further supply? Is he selling or renting? Used in the business of transportation of passengers? No, business of transportation of passengers. Is he running a share auto? Cost accountant, little bit respect we will give, okay? So why he's not running a share auto? If he's running a share auto, then yes, used in the business of transportation of passengers. No. Is it imparting driving skills to the CMA intermediate students, those who joined with him as assistants or articleship, whether he is teaching A for accelerator, B for brake, C for clutch, like that? No, na? Your madam is teaching, no, car and all she is not teaching, na? So then she cannot take ITC. Are you getting this? So why? Because it is not covered under exception. Because your madam is having one car. Every time she will be taking that car, and in the car there is one sticker also, that CMA sticker and all is there. Even though fully it is used for business purpose, can she take ITC? No, because it will come under others. It's not covered under these three. ITC cannot be availed. Is it clear? Next. Suppose vessels and aircraft. For vessels and aircraft, we have 4 exceptions. What are the 4 exceptions? Number 1, further supply, used in the business of transportation of passengers, driving schools, used for transportation of goods. One extra point they have added. In that case, ITC available. All other cases, ITC not available. Answer my question. Reliance Industries Limited is having an aircraft. Really, they are having one aircraft. So as soon as you get down in the Mumbai airport, you just see on the left side and come. So you will be seeing one shed, one big shed, wherein Reliance Industries is having one chartered flight there. Okay, they have purchased an aircraft. And on that purchased aircraft, can they take ITC? Is it used for further supply? Is it in the business of transportation of passengers? No, they are not doing business of transportation of passengers. That is one industry where Reliance has not come. Airlines. In airlines, they have not come. Okay, so not in the business of transportation of passengers. And used for imparting driving skills? No. Used for transportation of goods? No. Means the directors, when they want to go from one location to another location, they will be using that aircraft. So therefore, ITC available or not available? ITC not available. Then Ola or Uber driver purchased a car for use in the business of transportation of passenger. Can they take ITC? Yes, because for transporting persons, capacity does not exceed 13. Used in the business of transportation of passenger, they can take ITC. Is it clear? Then next, so these companies which will buy the bus for transporting its employees. Lot of manufacturing companies, if you see Hyundai or Royal Enfield or Saint Gobain, like that, lot of manufacturing companies which are there in the outskirts, that Sri Parambadur or Oragadam, etc. So what they will do, from city, they will be transporting the employees for which they purchase a bus. Can they take ITC with respect to that bus purchase? Yes, because for transporting persons, capacity exceed 13, ITC will be available. Is it clear? So that is about this particular chart. Next, look into the next one. There are 4 services in relation to motor vehicles. What are they? Repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. These 4 services are in relation to motor vehicles, vessels and aircrafts. If the motor vehicle, vessel and aircraft is eligible for ITC, then on this 4 service also ITC can be availed. If the motor vehicle purchased or vessel purchased, aircraft purchased is not eligible for ITC, on this 4 service also ITC cannot be availed. Okay, carefully listen. So MRF Limited purchased a bus for transporting its employees. Okay, and with respect to that bus, they have taken insurance and they paid the insurance charges along with GST. Can they take ITC with respect to that insurance? Yes, because as bus purchased is eligible for ITC, on insurance also they can take ITC. Then I purchased a car for use in my profession. Can I take ITC on the car purchase? No. So because it is not for further supply, not in the business of transportation of passengers, or not for imparting driving skills, so I cannot take ITC. For that car, I received repair and maintenance service. Can I take ITC with respect to that? No. Then another example, Ola and Uber, so they have purchased a car, and for that car they received authorized service center services. Can they take ITC on the authorized service center services? Yes. As the car purchased by them is eligible for ITC, even on that also they can take. That is authorized service center service also they can take ITC. Then another example, that is there is one transport company which purchased a truck for transporting the goods, and there is a huge demand. So because of which they don't have the trucks. So they have 5 trucks, but there is a huge demand. So they took 2 trucks on rent to do the transportation. Can they take ITC with respect to the rental charges paid? Yes. Why? Because as the truck purchased is eligible for ITC, for hiring, renting and leasing of truck also it is eligible for ITC. Understood? Then look into some special points related to this. While determining the capacity, driver seat should be included or not. That is, this 13 is including driver or excluding driver? Including driver, including driver. And further supply. So here in these 2 places you can see further supply. What is the meaning of further supply? Further supply means sale, means car dealer who will buy and sell the cars, or renting. I am buying the car and giving it on renting. Travel agencies and all will be there na. They will do renting of cars. Both are covered. So further supply includes purchase and sale of motor vehicles, or motor vehicles used in the business of renting or hiring or leasing. Then repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. For example, you are buying a 2-wheeler, okay. For the 2-wheeler, you will take the insurance na. When you take the insurance for the 2-wheeler, so on that insurance, suppose if the vehicle is meeting with an accident, then what you will do? You will pay anything out of your pocket? No. You will take the vehicle and give it to the garage or workshop. The workshop will do the repair and will raise bill to the insurance company. Can the insurance company take ITC with respect to that repairs and maintenance? Yes. Even though it is not a motor vehicle owned by them, but it is a motor vehicle insured by them, so they will take ITC. Is it clear? Read this wording again. Repairs, insurance and servicing of motor vehicle received by a general insurance company is always eligible for ITC. But in this regard, there is one circular which is a latest amendment. Suppose if the invoice is in the name of insured, for example, I am the owner of the vehicle, ICICI Lombard is the insurance company, okay. Now, invoice is given to me. Can the insurance company take ITC? No. Invoice should be in the name of, that is, the garage or the service center should raise invoice in my name, insurance company name, insurance company name. Then only they will be able to take ITC. See this. So usually insurance there are 2 types, cashless servicing or reimbursement mode. Cashless means I will go and give the vehicle there. They will only do the repair and they will recover the money from insurance. This is known as cashless. There is another mode is there, reimbursement. I will deliver the vehicle, I will pay out of my pocket for repairs, then insurance company will reimburse me. Is it clear? So reimbursement mode of claim settlement. See the question, whether ITC is available to insurance companies on the expenses incurred for repair of motor vehicles. So if it is a reimbursement mode of claim settlement, insurance company can avail ITC even though expenses initially incurred by insured. However, invoice for repair should be in the name of the insurance company. Okay, then next one. So even though it is like reimbursement, insurance company can take that 180 days, no problem. Even then they can take. Repair cost is beyond approved claims. See this. Generally, they will do, like they will bear only for the metal parts. Plastic parts and all they will not pay. For example, if the repair cost is 10,000, 8,000 they will bear, 2,000 rupees I should bear. Is it clear or not? So in that case, even though invoice is on them for 10,000, to what extent they can take ITC? Only on 8,000. ITC to the extent of amount reimbursed by the insurance company, but not on the entire repair cost. Then suppose if the invoice is in the name of insured, invoice is in my name, can they take ITC? No. Can I take ITC? Depends. If the motor vehicle purchased by me is eligible for ITC, then insurance also I can take, repairs and maintenance also I can take ITC, otherwise I cannot take ITC. Is it clear? Then look into another point, point number 4. Hiring, renting, leasing of motor vehicle as a statutory obligation by employer to employee is also eligible for ITC. Statutory obligation can be under any law. Let's try to understand with an example. There is a company which is providing cab facility to their employees. Okay, now generally can they take ITC with respect to the cab purchased? If they buy a car, they cannot take ITC. Why? Because it is not covered under further supply, not used in the business of transportation of passengers. Employees cannot be called as passengers and driving schools. So ITC not available. So instead of buying the cab, if they take the cab on rent also, they cannot take ITC, because as the cab purchase not eligible for ITC, renting is also not eligible for ITC. But that rent a cab, they are taking under a statutory obligation to provide it to their employees who are working in night shifts, because as per Tamil Nadu government order, every company which is working in night shift should mandatorily provide cab facility to their employees. Because of that they have taken rent a cab service. Can they take ITC with respect to that? Yes, that is this. Suppose if hiring, renting, leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC, and the statutory obligation can be under any law. Okay. Ambulance and caravan. Ambulance and caravan are treated as motor vehicles. Okay. So which motor vehicles? Which motor vehicles? Motor vehicle for transporting persons are vessels and aircrafts, or other motor vehicles. It will come under other motor vehicles. Why? So because ambulance is not for transporting persons. Sorry, for example, you wanted to go urgent. So book an ambulance. No. 500 rupees you pay. 1000 rupees also you pay. Will they drop you? No, no. Correct? So then caravan. Caravan is a place where, celebrities and all will be taking rest in the shooting spots, or changing their dress or makeup, etc. Because in shooting spot they will not be having proper place to stay. Now in that case, is it a motor vehicle for transporting persons? No, no celebrity will travel in caravan. So lot of caravans will be going. So don't go and check whether any actor is there. No actor will be there in caravan. They will have luxury cars and they will go in that cars. You got it? So that is not for transporting persons, and therefore it will come under other motor vehicles. Ambulance and caravan are not motor vehicles for transportation of persons. Okay. Then what will you do night time? Night. Not sleeping. Why? Huh? Reading. Wow. Super. Okay. Good, very good. Because usually afternoon times only people will be drowsy, but morning itself he was drowsy. So I got a doubt what health, any issue, etc. and all. But night till what time? 3 o'clock, 2 o'clock. I will give you one free advice. Don't read like that. There should be enough sleep for minimum 6 hours to 8 hours. 6 to 8. Okay, at your age 6 to 8 hours of sleep is must, which means you should be early to bed, somewhere like 10 o'clock. I'm not telling 9, 7 and all, 10 o'clock, decent. 10 o'clock you sleep, and next day morning somewhere like 5 o'clock, 5 you get up. Okay, solid, you'll have solid sleep. 11, 12, 1, 2, 3, 4, 5, 5 o'clock. Say worst come scenario, 6 o'clock. Okay. This is how your life should be. And when you get up, so you need to at least do a kind of physical activity for half an hour. Either a small walk, or if you are going for any gym or jogging, nothing. If nothing is there, at least in your house or around your house, just 10 rounds you walk. So your body will come into the normal state. Then you sit and read. and thereafter evening also you plan. Whenever you are attending classes, while attending classes, you should never be doing reading. For example, this revision class is going on now, you should not read during these times, because you should spend more time in listening and trying to understand in the classroom itself. Now think of, I am taking class customs portion one day over, yesterday some major topics got over, today I am discussing. Now these times when you are sleeping, then you will think, okay, let him tell, so evening I will go and read, like that you will think. But actually you are cheating yourself. Class also you are not listening, that also you are not doing properly. What is the point in that? Are you getting? So how it should be like when you are attending revision classes, when you are attending regular classes, you should do like that. Regular batch, etc. and all, definitely you will do final coaching and all. When you come for final, you do like that. But when you are in intermediate, that revision classes, when it is going on, your objective should be morning to evening revision class. Today whatever is taught, just we will do the brush up of it. Then again tomorrow class we need to come. Are you getting this? So this is how you need to do, because you know, whether you are attending revision class here or you are attending revision class anywhere, but you need to follow this discipline. When you follow this discipline, definitely you will be able to achieve. Somehow try to switch off your mobile by 9:30. 9:30. Half an hour, usually when you sleep, like when you go to bed at 10, you will not get sleep at 10. You will get sleep at 10:15, 10:30, etc. So 9:30 you go and do little bit of breathing exercise. What is it, breathing exercise? Nothing. So for some time you focus on your breath, whether you sit or sleep, any time you do. So you focus on your breath. What will happen is that the mind gets relaxed. When the mind gets relaxed, you will do a peaceful sleep, so that sitting in the class like that you will not sleep. 4-5 houseflies will go into your mouth, do romance and come out also. Okay, so still you will be sleeping. Okay, முடியலப்பா உங்களை பார்த்து எனக்கு தூக்கம் வருதுப்பா. Like while driving car and all, the passenger sitting next to the driver, if he sleeps, how the driver situation? I am like driver here, sitting before me, you are sleeping too much. Okay, that's why I said yesterday afternoon 1 hour break I am giving, sleep for some time so that you will be active like that. Okay, fine. And don't keep the subjects which are difficult in the night times. Whichever you feel which is difficult and all, you keep it in the mornings. And whichever subject you feel like you can read, it is easy, etc. and all, keep in the night times. So night times anyhow your mind will be half off, and at that time when you read that, anyhow that subject is easy, you know your favorite subject, so you will be able to do. Got it? So that's what usually some people feel like audit or law and theory papers and all will be difficult, so they keep it in the mornings. Costing, management accounting, financial accounting, that will be problematic, only you need to do sums, so that they will be keeping in the evening. So that's my advice to you. Okay, make use of it. Fine. So coming back to this, whether IT is available on demo vehicles used by dealers for showcasing and test driving to potential customers. Usually if you see lot of car dealers, latest model when it is released now, so they will be giving as a test drive. Okay, so I'll tell you one idea. What you do, get a driving license first get a driving license. You go to every car dealer and do the test drive, so you will get the experience of driving every car. You understood? Because I do that, I personally do that. So because whenever a new car model gets released, I wanted to drive that car. For that I will not buy and all. Why should I buy? You got it? I will go, because already I have 2 cars, and on the top of that if I buy also, I don't know where to keep that car, and my wife and all will not accept if I am selling and buying car. She will tell, no, why you need to sell and buy the cars, it is waste. And she's right actually, so why should we sell and buy? But I wanted to drive the new model of the car, so I will go do the test drive. So will there be any restriction, any charges? No, absolutely free. Absolutely free. You can go on a big round and come. Petrol also they only will fill. Correct? Now, they buy these cars or not? The dealers will buy the test drive cars also. Can they take ITC on the test drive car purchase? First, car capacity is what? Does not exceed 13. Is it covered under the exception further supply? No. It's not further supply. The test drive car they are not selling now. If they sell also, you will not buy. If someone test drive, why will I buy? Yeah? When you buy the new one only, no. So, further supply, no. Used in the business of transportation of passengers, no. Driving schools, no. Which means, logically, they should not take ITC. But, many car dealers said to the government that, only when we are giving for test drive, people will get the interest to buy the car. Because the moment they sit in the car and they drive and see the luxury, so they feel like they should buy the car. That's a motivation. So therefore, definitely it will in turn push for sale of car. So ITC should be given. Accordingly, government gave a circular that ITC is available on demo vehicles if they are used for promoting further supply of motor vehicles. Suppose if demo vehicles are capitalized, whether demo vehicles is charged to P&L or it will be capitalized. It will be capitalized. Capitalized means what they will do? They will be putting it as an asset and they will claim depreciation. When they claim depreciation, remember one important point. What is that? They should not add the GST component. If demo vehicles are capitalized, ITC is available unless depreciation is claimed on tax component. Okay. Now what about remaining cars which they buy? That is stock in trade. Correct? On stock in trade, can they claim depreciation? No. Section 32 depreciation is only on asset, not on stock in trade. On stock in trade, no idiot will claim depreciation. Is it clear or not? So therefore, on remaining cars, they will not claim depreciation. So this question will not arise. Is it clear? Next. Also, on sale of such capitalized demo vehicles, GST is payable in terms of 18 subsection 6. What is that 18 subsection 6? There is one section which says that whenever you buy any capital goods on which ITC is available and you sell those capital goods, whether the demo vehicle will be sold? Yes, when a new model is launched. When a new model is launched, for example, Mahindra Thar, like that one car was there. They launched a new model called Thar Rocks, like that a 5-door car they have launched. 5-door. Previously Mahindra Thar was 3-door, front to back side, that's it. And now they have come out with the upgraded version, 5-door car they have released. 1, 2, 3, 4 and back side, total 5-door car. And that's an upgraded model. Upgraded model means, why will a dealer keep the outdated model as demo vehicle? They will keep only upgraded model. Correct? In that case, the old one they will be selling. To whom they will be selling? To the dealers. To the dealers, car dealers. I mean travel agencies. What they will do with that? They will use it for travel purpose. Is it clear? So now in this case, whether it is sold as new one or used one, it will be sold as used one. That's why the GST will be payable in terms of 18.6. How to compute GST as per 18.6? You just turn the pages, you will be able to find how to compute the GST as per 18.6. Page number 113 you can see. GST payable under section 18.6. So when 18.6 will be applicable? When capital goods are supplied on which ITC is availed. GST payable shall be highest of the following. What is that? Highest of what? A. ITC availed. How much ever ITC that you have availed on that particular asset minus depreciation. How we are giving depreciation here? 5% for every quarter or part thereof. From where to where? From the date of purchase till the date of supply. Somewhere already we come across this 5% point yesterday. Where? Rule 32, sale of second hand goods, repossessed goods. So a finance company will repossess the asset and will sell that asset. At that time, sale price will be the price at which they are selling, but purchase price will be original purchase price minus 5% for every quarter or part thereof, that one, same logic. So ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of supply, or GST payable on the value of that capital goods, whichever is higher. Is it clear? So if the dealer purchased the demo car, on the demo car when he is selling, say after 2 years he is selling, after 2 years when he is selling, ITC availed minus 5% for every quarter or part thereof. For 2 years means how many quarters? 8 quarters. One full how many quarters? Per 4 quarters. Okay. So 2 years means 8 quarters. You have knowledge and all now. One full is 4 quarters, etc. Okay, good. So good only. Okay. So 2 years means it will be 8 quarters. 8 into 5, 40%. So reduce 40%. So what is the ITC availed? Some amount minus 40%, remaining 60%, or the demo vehicle will be sold for some rate, some value, that into GST, whichever is higher will be taken. Understood? Next. But remember when 18.6 will come? 18.6 will come if two conditions are satisfied. First, you should be purchasing capital goods, and on that capital goods ITC is availed. And see this below, this section is not applicable in case of refractory bricks or molds and dies, jigs and fixtures which are supplied as scrap. So refractory bricks means bricks which are used for construction of commercial clints. Clints means where the raw material will be heated. So in industry, factories and all, there will be clean, in that metal scrap and all they will pour and they will heat it. So that bricks will be called as refractory bricks. Molds and dies means to bring the product in a requisite shape. Then we have jigs and fixtures, that is to hold the equipment. Okay. So this refractory bricks, molds and dies, jigs and fixtures, it is sold as what? Scrap. Then in that case GST will be payable on normal sale value, which means we will not take ITC availed minus 5% or GST payable whichever is higher, just B point, that is GST payable on value of capital goods. You understood about 18.6? And I have given one question related to 18.6. You can see that in next to next page. Capital goods purchased on 8/10/2019 for rupees 10 lakhs, excluding GST at 12%. They were disposed of on 5/5/2021 for rupees 6 lakhs, excluding GST at 12%. Compute the GST payable. So now, tell me what is the ITC availed? What is the ITC availed? Read the question. What is the ITC availed? 10 lakhs excluding 12% means 1,20,000 minus 5% into how many quarters are part thereof. While doing the quarter computation, take the calendar quarter. Calendar quarter means Jan to March is 1 quarter, then April to June is 1 quarter, July to September is 1 quarter, then October to December is 1 quarter. What is the date on which it is purchased? 8/10/2019. 8/10/2019 means it comes in October. October, November, December, that is 1 quarter. Then again, so 2019 we have 1 quarter, 2019 1 quarter, 2020 4 quarters, 2021 Jan, Feb, March, April, May, June. So 2 quarters. Okay. So total how many quarters? 7 quarters. So ITC availed 1,20,000 minus 5% into 7 quarters, that is 78,000, or GST on sale value. What is the sale value? 6 lakhs into 12%, 72,000, whichever is higher. How much? 78,000. That is the GST payable in this case. Got it? First, it should be capital goods on which ITC should be availed. Now, what will be your answer? If such goods are not capital goods, then 18.6 will not come. 18.6 will come only if it is capital goods on which ITC availed. If it is not capital goods, 18.6 will not come. Then how we need to pay GST? Normal transaction value. So normal sale value into GST. What is the normal sale value? 6 lakhs into 12%, 72,000. Is it clear? Then next point you see. What will be your answer? If such capital goods are disposed of without consideration and the value determined under Rule 31. What is that value determined under Rule 31? Residual value. Yesterday we discussed 27. Price is not sole consideration. 28 related party transaction, 29 principal agent transaction, 30 cost plus 10%, 31 residual value. Do you remember? So that residual value is 4 lakhs. So what we need to do? A or B, whichever is higher. A, ITC avail. How much is the ITC avail? Minus 5% for every quarter or part thereof. 78,000. Or B, what is the value determined under rule 31? Why we need to determine value under rule 31? Because it is without consideration. Sir, without consideration means it is not a supply now, sir. No, it will become supply. There are 4 activities. Even though without consideration it will become supply. DRIP, disposal of business asset. Disposal of business asset on which ITC is avail. ITC avail na. So therefore it will become supply. So we need to determine the value under rule 31. So 4 lakhs into 12%, 48,000, whichever is higher, that is 78,000. What will be your answer? If such capital goods are disposed of without consideration and the value cannot be determined under rules. Disposed of without consideration and the value cannot be determined under rules. Means A will be 78,000, B will be 0. Why value cannot be determined? So only A will be there. Then what will be your answer if such capital goods are sold after 5 years? After 5 years means A will become 0. Why A will become 0? For 1 quarter 5% pa. Means 1 year it will be 20%. For 5 years it will be 100%. Means A will become 0. Correct? We will fully depreciate. And B will be GST on sale value, that is 72,000, whichever is higher will be 72,000. Understood? Then look into last situation. Write down this. What will be your answer if they are refractory bricks which are sold after 4 years as scrap for a value of rupees 1 lakh? Okay. Then what will be taken in that case? See, if it is refractory bricks, there are 3 goods. What are the 3 goods? Refractory bricks, molds and dies, jigs and fixtures, which is sold as scrap, Then what we will do? We will just take the sale value into GST rate. What is the sale value? 1 lakh into 12%, that is 12,000. That will be taken as the GST payable. Understood? So that is with respect to this. Then come back. Why we discuss this? That okay. Why we went to 18.6? Demo vehicle. Whenever we are selling the demo vehicle, we need to pay the GST as per 18.6. Is it clear? Next, if the demo vehicles are used for non-business purpose, means what? Dealer will use the demo vehicle for his personal purpose. Can he take ITC? No. Any vehicle or anything which is used for non-business purpose, you cannot take ITC. Or as a part of marketing services for the manufacturer. What is that? If you see, in many shopping malls, they will be keeping the car, as a display. Have you been to Phoenix Mall in Chennai? Velachery. In that mall, if you see in the ground floor, that Palladium, okay. So lot of cars, around some 5-6 cars, they have kept in the display. Have you seen that? Is it allowed for, test drive? Take like Beast movie, we will go one round and come in the car. Not allowed, not allowed. You understood? So therefore, ITC available or not available on that? No. Even though it is a demo car, but it is not used in test drive. So due to that reason, ITC not available. If the demo vehicles are used for non-business purpose or as a part of marketing services for the manufacturer, ITC is blocked. Okay. Then, so we completed first one, that is construction, motor vehicle related block credit. Now we are discussing construction related block credit. That is total 3 pa. Any service, works contract service or goods purchased or received in relation to construction of an immobile property, ITC not available on those inward supplies. What are the 3 inward supplies? Any service. Any service for construction means what? Construction service, then interior decorator service, architect services, okay, all those. Works contract service or any goods. What is the goods purchased for construction? bricks, cement, TMT bars, pipes, fittings, etc. Okay, purchased or received in relation to construction of an immovable property, ITC not available. So it's a blocked credit. However, in 3 places they are giving ITC, that is exception. So look into the exception 1. Before that, what is the meaning of works contract service? Simple pa, whenever you receive service that is from a builder, the builder is only buying the material required for construction and he will only doing the construction, then it will be called as works contract service. Usually construction service means you will buy the material required for construction, you will hand it over to them, they will do only the construction. Okay, that is called as construction service. But in works contract service, what will happen? So you will not buy anything, the builder only will buy everything and he will do the construction and hand over the property to us. That will be coming under works contract service. In case of works contract service, you know, ITC is blocked credit. Okay, that is the meaning of works contract. You can see works contract involves transfer of property in goods as well as provision of services for a single consideration. Exception, the above discussion is not applicable to supplier. What is that? If a works contractor receives construction service for construction of an immovable property, then ITC can be availed. So means the restriction is only to the owner of the property. For example, I am builder, you are owner of the property. If you buy material, you receive service, you cannot take ITC. But if I buy the material or if I receive the construction service, can I take ITC? Yes. Okay, read it again. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immovable property, then ITC can be availed on construction service. Second point, construction of plant and machinery even though immovable. Suppose if I am constructing a lift, escalator, that is a plant and machinery even though immovable. For that construction, can I take ITC? Yes. Construction of plant and machinery even though immovable. But plant and machinery excludes what? Telecommunication towers and pipeline laid outside factory gate. Third, suppose if the construction expenditure is charged to P&L, then also you can take ITC. You tell me when the construction expenditure is charged to P&L. When the construction expenditure will be charged to P&L. Repairs. If you do a new construction, you will never charge it to P&L. You will capitalize. Correct? So only when it is repair expenditure or renovation expenditure, you will charge it to P&L. So you can take ITC. If the construction expenditure is charged to P&L, then also ITC can be availed on above inward supplies. Got the clarity? So that is about these 3 exceptions. Now, this is not required. So just look into this circular. Whether IT is available on ducts and manholes used in the network of optical fiber cables. Ducts and manholes means like this. So what they will do, they will dig, they will put a manhole and they will install the pipelines for giving the connection, internet, optical fiber connection, etc. Can they take ITC on this construction expenditure? Yes. First of all, it is covered under plant and machinery. Am I right? But plant and machinery excludes telecommunication towers and pipelines laid outside factory gate. Is it telecommunication tower? No, it's not telecommunication tower. Is it pipeline laid outside the factory gate? This is not a factory and all. Okay, that is for manufacturer. So there is no restriction. So IT is available. Say this. Ducts and manholes which are integral part of optical fiber cables qualify as plant and machinery and can avail ITC on the same even though used by telecom companies as only telecommunication towers are excluded from the meaning of plant and machinery. Even they do not fall under pipelines laid outside factory gate. Then look into some additional points. Only hiring, renting and leasing of motor vehicle is block credit. However, leasing of any other item is not block credit, because we discussed like if the immovable property is taken on rent, for that rent we pay rental charges plus GST. Can that GST be taken as ITC? Yes, because what we have discussed as blocked credit is only hiring, renting and leasing of motor vehicles. But hiring of immovable property or renting of immovable property and all is not block credit, we can take ITC. Then works contract service confined only to immovable property. ITC available on construction of pipelines inside the factory. Then ITC available on rail, 2 or 3 wheelers with capacity up to 25 cc, because train will not come under motor vehicle, and 2 or 3 wheelers up to 25 cc. Up to 25 cc means, you know, some small cycles with motor. Bicycle is there, na? Bicycle will come with a motor, no? That is called as capacity up to 25 cc. On that we can take ITC, but who will buy that? I don't know. So if it is purchased also for personal purpose only, it will be purchased. For business purpose, think of a situation, Rapido driving in bicycle, okay, nice na, maybe, so, cut it, and ITC up to 25 cc, so that is not a motor vehicle, means happily we can take ITC. Then other blocked credits, look into other block credits, inward supply, first one, membership of a club, health and fitness center. It's a blocked credit. What is that? Membership of a club, health and fitness center. So any membership of a club will be blocked credit. However, there is one exception. What is that? If it is provided by employer to employee under a statutory obligation. Already we saw one point related to that, where hiring of motor vehicles under a statutory obligation by employer to employee. Like that, even under a statutory obligation, if they are taking membership of a club, then ITC available. Then next one, travel benefits to employees on vacation. So employee is going on a vacation, and that vacation expenditure is borne by the employer. Can they take ITC with respect to the travel expenditure? No. What if the employee is going on a business visit? Of course they can take ITC. And here also we have one exception. What is that? Provided by employer to employee under a statutory obligation, then ITC is available. Then non-resident taxable person. Who is a non-resident taxable person? A person who is coming from outside India to India. Do they have any physical place of business in India? No, they don't have any physical place of business in India, and they are engaged in supply of goods or service in India. They should be registered in India. Example, right now IPL season is going on. So lot of foreign cricketers will be coming to India to play IPL. Do they have any physical place of business in India? No. Will they be called as non-resident taxable persons? Yes, they will be called as non-resident taxable persons, because they are coming from outside India to India and they don't have any physical place of business in India. Are they required to register in India? Yes, they are required to register in India, and they cannot take ITC on any inward supplies except on import of goods. So they will be importing their goods. What goods? Bat, helmet, their kit, everything they will import now. They will not bring it along with them. So it will be imported as a cargo. On that, some customs duty along with IGST is paid. Can the IGST be taken as ITC? Yes, that alone be taken as ITC. But in India, they will receive lot of services. On that, can they take ITC? No. So NRTP cannot take ITC on anything except on import of goods by NRTP. Then next, food and beverages, outdoor catering, beauty treatment including cosmetic, plastic and hair transplantation, life insurance and health insurance services. Remember three: food, beauty, insurance. Okay, eat too much food, beauty gets spoiled, insurance is required. Got it? Food, beauty, insurance. Okay, food and beverages, outdoor catering, beauty treatment including cosmetic, plastic surgery, hair transplantation, then life insurance and health insurance. This is blocked credit. However, we have three exceptions. Exception number one, inward supply, outward supply in the same category. What does it mean? That is, I am into sale of food and beverages and I buy the food and beverages. Can I take ITC? Yes. Generally, food and beverages is blocked credit, but I am buying it and I am selling it, so I can take ITC. That is the meaning of inward supply and outward supply are same. Then inward supply is part of composite or mixed outward supply. Example, I am into the business of transportation of passengers by airways. I am an airline company. Now I am purchasing food and beverages for giving it to my passengers. Now, inward supply is part of outward supply. Can I take ITC on food and beverages purchased? Yes. Okay. Then third, provided by employer to employee under a statutory obligation. What is this? I am a factory and I have to mandatorily provide food to my workers who are working in my factory. For that reason, I received outdoor catering services. Can I take ITC? Yes, because it is under a statutory obligation. Is it clear? Next one. Balance. Suppose if I am purchasing any goods from a person opting for composition scheme, can I take ITC? No. First of all, the person opting for composition scheme should not be charging GST to me. What is composition scheme? Rather than paying GST at the regular rate, a person opting for composition scheme will pay GST at the reduced rate. But they need to pay the GST out of their pocket. They should not be charging it to me. If they are charging it to me, can I take ITC with respect to that? No. That is this. Also, if any goods are purchased for personal consumption, can I take ITC? No, I cannot take ITC. Suppose if any goods are purchased for use in relation to obligation under CSR. So, in Companies Act, you would have studied CSR obligation. What is CSR obligation means? Corporate social responsibility. A company should spend a percentage of their profits for the welfare of the society. So, during that spending, they may purchase some goods. For example, a company wanted to give blankets to homeless people, for which they purchase the blanket. On that blanket, GST paid can be taken as ITC? No, because it is blocked credit for use in relation to obligation under CSR. Then, goods lost or stolen or destroyed or written off. I purchased some goods, someone has stolen that goods. I have purchased some goods which were destroyed during accident, or it became obsolete, so I have written off, or I gave it as gifts or free samples. Can I enjoy the ITC with respect to that? No. So that is a blocked credit. Goods lost, stolen, destroyed, written off or disposed of by way of gifts or free samples. However, there is an exception for that. If gifts or free samples is treated as supply under 7(1)(c), then ITC not required to be reversed on inward supplies. What does it mean? There is one point in supply chapter, that is, if an employer gives gift to employee more than one amount, then it is supply. What is that? 50,000. Very good. So, gift given by employer to employee more than 50,000 rupees per annum per employee is supply. What if it does not exceed 50,000 per annum per employee? Not a supply. Got it? Now listen. You are my employee. I am your employer. I purchase an iPhone which is 90,000 plus GST. Now that iPhone I am giving to you as a gift. Supply or not a supplier? Supply. Why? Value exceed 50,000. Correct? Now on this iPhone purchase, can I take ITC? Yes. Because if the gifts or free samples is treated as supply under 7(1)(c), then ITC not required to be reversed on inward supply. Suppose if I am buying a Samsung phone, that Samsung phone is 40,000 plus GST. Now that I gave as a gift to you. Now in that case, can I take ITC on the phone purchased? No, I cannot take ITC on the phone purchased. If gifts or free samples is treated as supply, then ITC not required to be reversed. Okay. Then next one, whether ITC available on goods purchased for free replacement during warranty period. What is this? For replacement during warranty. Warranty means what? You purchase something. Okay. Suppose if it is damaged, what you will do? Say you purchased a phone, or you purchased a TV, or you purchased something which is covered under warranty. What will happen if there is any issue with respect to that? You will ask them to replace. When you ask them to replace, they need to buy a new one and replace it. At the time of buying new one, can they take ITC? Yes. Yes, they can take ITC. We don't have any restriction, they can take ITC. And they are giving it for free, replacement. Now should they pay any GST? No. So 7(1)(c) won't it come? Disposal of business asset on which ITC availed? No. That's what they have given in the circular. See there. Whether a part or entire product is replaced during warranty. Whether a part or entire product is replaced during warranty. ITC can be availed on the goods purchased for warranty, irrespective of whether any consideration is charged or not with respect to such warranty repairs. Is it clear? Then next, where distributor uses his stock for replacement, manufacturer replenishes the stock on which manufacturer can avail ITC. What is this? So distributor will be using his stock, whatever stock that he has will be used for replacement. I am a dealer, two-wheeler dealer. I have lot of inventory of parts. When you give your vehicle for servicing, I will take one part and I will replace under warranty. But that part manufacturer should send me na. At that time, who will buy the part? Manufacturer. Can manufacturer take ITC? Yes. Where distributor uses his stock for replacement, manufacturer replenishes the stock. Replenishes means what? Refills. Refills the stock on which manufacturer can avail ITC. If I buy and do the replacement, I can take ITC. If I am not buying, manufacturer is buying, but he is giving to me which I am replacing, then manufacturer will take ITC. Is it clear? Then next, third point. Usually, at the time of purchase of electronics and all, they will say, sir, if you pay extra amount, you will get a extended warranty. Have you heard of this? Standard warranty will be 1 year or 2 years, but if you pay some extra amount, you will get a extended warranty. Whether that extended warranty charges will be taxable? Yes, definitely it will be taxable. At what rate it will be taxable? For this they are telling, if that extended warranty charges is collected at the same time by the same dealer who is selling the product. For example, I am selling you TV. At the time of selling you TV, by the same dealer, if I collect additional warranty charges, the rate of GST for TV will be applicable to the warranty charges also. Is it clear? Read it. Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. If the amount for extended warranty is paid to another supplier, it is treated as a, understood? It is treated as a separate supply. Then, if the amount is paid for extended warranty after purchase of goods, then it is treated as different supply, whether purchased from the same supplier or different supplier. Related to this, I have given one example. You can see that in page number 119, you can see here, amount paid for the extended warranty. This amount paid for extended warranty, we will divide into 4. So, I will give you one example. I purchased my iPhone. At the time of purchase of iPhone, they said, sir, you pay 15,000 rupees extra, sir. You will get Apple Plus coverage. What is this Apple Plus coverage? Suppose, if anything happens to my iPhone, if it is dropped, broken, or battery issue, anything, they will replace it free of cost, for which I need to pay 15,000. Now, I have two options. Either I can pay at the time of purchase or I can pay later also within 30 days. Okay. Either I can pay at the time of purchase or I can pay later within 30 days. I can buy from the same dealer from whom I am purchasing the phone, or I can buy directly also from Apple or any other dealer. Is it clear? Now, so total 4 possibilities. Same dealer, same time. Same dealer, different time. Okay, wah. Then different dealer, same time. Different dealer, different time. 4 possibilities. In that first place alone, the rate of phone will be applicable for the additional warranty charges. In all other 3 places, it will be treated as a separate transaction and we need to pay GST at the rate of 18%. That's the regular rate for services. See this. Amount paid for extended warranty at the time of original supply from the same supplier, treated as composite supply and taxable at the rate applicable to principal supply. In all other cases, treated as separate supply and taxable at the rate applicable to services. Now see the example below. MI manufacturer is selling a television to retail showroom. What is the rate of GST applicable to television? 28%. And they will also sell the television to Chroma, a retail showroom. Now, a customer, Mr. Z, is purchasing the MI TV along with extended warranty from MI retail showroom, or he can buy the television from Chroma and he can make the payment for extended warranty 18% to manufacturer. Is it clear? Now what is the rate applicable to TV? 28%. What is the rate applicable to warranty? 18%. Understood this? Now situation number 1. Suppose if MI retail showroom sells television along with extended warranty for 28,000 to Z, television is 26, extended warranty 2,000. Now at the same time or different time? Same time. Same dealer or different dealer? Same dealer. Then the entire 28,000 will be taxable at 28%. Okay. So entire television including warranty will be taxable at 28. Is it clear? Situation 2. MI retail showroom sells television for rupees 26,000 to Z and after 1 month sold extended warranty for 2,000. Now what is your answer? It is not a composite supply, means it should be treated like a independent supply. So 26,000 will be taxable at 28%, 2,000 will be taxable at 18%. Then situation 3. Chroma sells television for rupees 28,000 to Z. Mr. Z pays 2,000 to MI for extended warranty. Now same dealer or different dealer? Different dealer. Again same story. 26,000 will be 28% and 2,000 will be taxable at 18%. Chroma sells television for 26,000 and after 1 month sold extended warranty for 2,000. Now also same, this 2,000 will be taxable at 18% and this 26,000 will be taxable at 28%. Got it? Then, so with this we completed blocked credits and we need to discuss input tax credit in special cases, special circumstances. But before that, let's see your study material. Blocked credits, they have given all the information, every point, nook and corner I have discussed with you. Okay. And then ITC in special cases. I don't think so questions are there on this. See some illustrations which they have given. P Limited, a registered manufacturer of Jaipur, entered into contract with a supplier for supply of input Z. In October, as per contract, it was agreed that 10,000 kgs of input Z will be supplied for 7,28,000 inclusive of GST in 4 lots. Invoice for 7,28,000 has been issued with supply of first lot of input Z. Following further information has been provided regarding supply of input received in subsequent lots. Briefly explain whether P Limited is eligible to take credit on proportionate basis. No, they cannot take ITC on proportionate basis. In case of goods received in lots, when they can take ITC? Only on receipt of last lot. What is the date on which they received last lot? 1st December 2024. So there only they can take ITC. Got it? Then next illustration, compute the input tax credit available with MS Motors Limited, manufacturer of cars, in respect of the following services availed by it in the month of October 2024. Accounting and auditing services. Accounting and auditing services anywhere in the blocked credits? No, we have not discussed now. And is it in the course or furtherance of business? Yes. So therefore we can take ITC on 17,200. Health insurance services for employees. Health insurance. Insurance is a block credit. Food, beauty, insurance. Okay. And we have 3 exceptions. Is it provided under government obligation? No. Is inward supply, outward supply same category? No. Inward part of outward supply? No. Which means ITC not available. routine maintenance of cars manufactured by MS Motor Limited. So this is not the cars that they purchase. This is the cars they manufacture. So nowhere we have block credit and they can take ITC with respect to this 28,000. Moreover, it is used in the course or furtherance of business. Repair services for office building. Office building. Cost of repair is charged to P&L. Can they take ITC? Yes. Generally, repair expenditure is block credit, but they have charged it to P&L. So they can take ITC. What if it is capitalized? They cannot take ITC. Hotel accommodation and conveyance facilities to employees on vacation. Vacation. ITC not available. Visana. Travel benefits extended to employees on vacation. We discussed here. Travel benefits extended to employees on vacation is a blocked credit. So therefore we cannot take ITC with respect to that. Okay. ITC not available on 13,360. Testing services availed for car engines. Anywhere it is in the block credit? No. Is it in the course or furtherance of business? Yes. So we can take ITC. So if it is a blocked credit, ITC don't take PA. If it is other than block credit, not covered in block credit but used in the course or furtherance of business, you can take ITC. Next. Look into illustration 29. Compute the amount of input tax credit admissible to Sonam Limited in respect of various inputs purchased during the month of September 2024. Goods purchased without invoice. Can we take ITC? Why? One of the conditions for availment of ITC is that they should be in possession of tax paid document. Here they are not in possession of tax paid document. That's why ITC not available. Goods purchased from Akhil Limited. Full payment is made by Sonam Limited to Akhil Limited against such supply, but tax has not been deposited by Akhil Limited. Now, can we take ITC with respect to this? Goods purchased from Akhil Limited, full payment is made by Sonam Limited to Akhil Limited, but tax has not been deposited by Akhil Limited. I told you, if supplier not paid the tax to government, then recipient cannot take ITC. So 2,20,000 they cannot take ITC. Purchase of goods not used for business purpose. ITC not available because non-business. Purchase of goods from Komal Limited. Invoice of Komal is received in September, but goods were received in October. So when we can take ITC? October, but right now we are determining September, so we cannot take ITC. Goods purchased against a valid invoice from Vikram Limited. Sonam Limited has made payment to Vikram Limited for such purchases in the month of October 2024. Can they take ITC with respect to this? Sonam Limited has made payment to Vikram Limited for the purchase in October 2024. Let it be. Let it be. They can take ITC because there is no condition that only when the payment is made to supplier we can take ITC. Correct or not? So 38,000 they can take ITC. Remaining and all they cannot take ITC. Then illustration 30. All these are based on blocked credits they have given. W Limited, a registered supplier, is engaged in manufacture of tanks. The company provides the following information pertaining to GST paid on purchases made or input service availed by it during the month of January. Purchase of machinery where debit note is issued. Can we take ITC? Yes. Machinery nowhere in the block credit and debit note is one of the tax paid document on the basis of which ITC can be availed. Input purchased was directly delivered to Mr. X, a job worker and a registered supplier. Bill to ship to, I told you, even though the goods are delivered to some other person, but the recipient can take ITC. So 1 lakh ITC available. Computers purchased, depreciation was claimed on the said GST portion under Income Tax Act. So can they take ITC? No, because depreciation is computed on tax component. Works contract service availed for construction of staff quarters. Works contract is a blocked credit. Any service, works contract service or goods purchase for construction of an immovable property, it's a blocked credit. And nowhere it is given exception. Nowhere they are telling that it is charged to P&L, etc. That's why it's a block credit. ITC not available. So therefore the answer will be 3,15,000. Then another question, illustration 31. X Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information of GST paid on the purchases made or input service availed by it during the month of September 2024. Purchase of cabs used for transportation of its employees. Can they take ITC with respect to this? No, yeah, cab. Cab means what? Motor vehicle. Capacity does not exceed 13 and it is not covered under further supply. Not used in the business of transportation of passengers. Not for imparting driving skills. So ITC not available. Okay. Then inputs consisting of, so 1 lakh ITC not available. Inputs consisting of 4 lots, out of which second lot was received during the month. So when we can take ITC? Only on receipt of last lot. So this also ITC not available. Capital goods, out of 3 items, invoice for 1 item was missing and GST paid on that item was 50,000. Can we take ITC for 50,000? No. Only for 2 lakhs we can take ITC. Outdoor catering service availed on Women's Day. What is your answer? Outdoor catering service availed on Women's Day. Blocked credit. Anything. See, outdoor catering is block credit. Women's Day, anywhere it is given on statutory obligation that Women's Day you should receive outdoor catering and give like that. No, so ITC not available. So therefore 2 lakhs will be taken as the answer. Then see this also we discussed. BA Private Limited purchased machinery worth 10 lakhs excluding GST on 27/2024 on which it paid GST at 18% and availed the ITC. On 5/3/2025, it sold the machinery for 8 lakhs to HA Private Limited. The rate of GST on sale is 18%. What is the course of action? Machinery means capital goods on which ITC is availed and it is sold. So what is that we need to do? 18 subsection 6. How to calculate the GST payable? ITC availed. So check the question. What is the ITC availed? 1,80,000 minus 5% for how many quarters? When is it purchased? 27/2024 it is purchased. 5/3/2025 it is sold. So 27 means it is which quarter? July, August, September. Correct? Then October, November, December. Next year, Jan, Feb, March. Means how many quarters we have used? 3 quarters. So see this. 1,80,000 minus 5% into 3 quarters is 15%. So 1,80,000 minus 15%, that is 1,53,000, or GST on sale value. What is the sale value? 8 lakhs. 8 lakhs into what is the rate of GST? 18%. So 8 lakhs into 18%, that is 1,44,000, whichever is higher. Which is higher? 1,53,000 is higher. Got it? So then, so this other questions are related to additional concepts which we have not yet discussed. So come back to this. What we completed so far is section 17. So section 41, availment of ITC. Section 49, utilization of ITC. See, there is a time limit for availment of ITC, but there is no time limit for utilization of ITC, which means once the credit has been taken, it can be adjusted with my liability. If I don't have liability, I can carry forward. Like that, for how many years I can carry forward? No time limit. In income tax, this business loss and all, there is a time limit to carry forward 8 years, 4 years, like that. But in GST, input tax credit, no time limit. You can carry forward for any number of years and adjust against your liability in future. Is it clear? So that is utilization. First, availment of ITC 41, 49 utilization, section 16 condition for availment of ITC, 17 apportionment of credit and blocked credit. Now we are discussing input tax credit in special circumstances. In that 18 subsection 1, availment of ITC on closing stock. Say this. So first 18(1)(a). 18(1)(a) says that whenever I am liable to get registered and I make application for registration within 30 days. Before the date I am liable to get registered, whatever is my closing stock, that only I will be using for making outward supplies from the date I am liable to get registered. For example, you see the chart there. I commence a business on 8/8/2024. 8/8/2024 I commence a business, and on 10/10/2024 I am liable to get registered, and I made application for registration on 25/10/2024. Now tell me, from which date I should start paying GST on my outward supplies? From which date I should start paying GST on my outward supplies? 110 na? 25/10 na? Very good, 110. I need to pay GST from 110. Now, from where I will get the stock? So, from sky it will not come. Whatever stock that was there yesterday, using that only now I will make sales today. Clear or not? I am on 1/10/2024 pa. As on 1/10/2024, I make some outward supplies. From where I will make outward supplies? Whatever closing stock I have. On that closing stock, whether ITC has been taken or not taken, because at that time I was a unregistered person. One of the condition for availment of ITC is only a registered person can take ITC. So now only I am liable to get registered. Can I enjoy the ITC on this closing stock? Yes. On this closing stock I can enjoy the ITC. So see there. So we need to see the closing stock as on which date? Before this date. What is before this date? 30/9/2024. I need to see the closing stock. What is the closing stock? Raw material as such. Raw material in the form of WIP. Raw material in the form of FG. How will you find raw material in WIP? How will you find raw material content in WIP? You have process costing. Process costing chapter is there. You don't have a. In process costing, when you see the process accounts, you will know as to what is the raw material introduced in the process. So, based on that, you can find the raw material in WIP. Then, raw material in FG. Can you find raw material? How can you find raw material in FG? Bill of material, BOM. Input output ratio. For every unit of output, what is the unit of input? For example, 3:1 input output ratio means what? For 1 unit of output, 3 unit of raw material is required. Based on that, you can find raw material present in FG, raw material in WIP, raw material as such. These 3 raw materials, whatever GST that you have paid, you can avail as ITC. Got it? And when you can avail it as ITC, after you are liable to get registered, after you make application, you will get a registration certificate now. Post that registration certificate, you can avail this as ITC within 30 days, or it can be extended for a further period. How to avail this ITC? We need to file one form. What is that form? Form GST ITC 1. And this form should be certified by a CA or CMA if the claim of ITC exceeds 2 lakhs. If the claim of ITC does not exceed 2 lakhs, self-declaration. In MCQ it can be asked. ITC 1 should be certified by CA, CMA if, okay, A, B, C, D. So 2 lakhs, 2 lakh 50, okay, 2 lakhs, exactly 2 lakhs. Certification required? Not required. 2 lakh 50 only required. You understood? So more than 2 lakhs CA, CMA certificate, up to 2 lakhs self-declaration. Is matching required or not required? Not required. Not required means what? It need not come in 2B. It will not come in 2B because at the time when you purchase, you are a unregistered person. So it will not come anyhow in your 2B. Got it? So this is about 18(1)(a). Got the clarity about this? So you can remember this in a simple form like this. 18(1)(a) situation, you are liable to get registered and you applied for registration within 30 days. You can avail ITC on closing stock. What is that? Inputs in stock, inputs contained in WIP in stock, inputs contained in FG in stock. Matching not required. On which date? Immediately preceding the date on which you are liable to get registered. Understood 18(1)(a)? Now 18(1)(b). 18(1)(b). You go through this chart and tell me what is the difference you can find in this. 18(1)(b). You commence business. Voluntarily you are getting registered. Got it? Voluntarily you made application for registration and the registration certificate is granted. 18(1)(a), you are liable to get registered and you made application for registration within 30 days. But here you are voluntarily getting registered. From when are you liable to pay GST? 110 or 311? 110 or 311? 311. Because 110 you just voluntarily applied. But whenever you got the registration certificate, from the date only you need to pay GST. So 311. So we need to see the closing stock as on 211. Very good. You need to see the closing stock as on 211. Same story. Raw material as such, raw material in WIP, raw material in FG. Got it? And it should be purchased within 1 year prior. Here also it should be purchased within 1 year prior. That condition is common. And these three GST paid can be taken as ITC. What is the time limit within which we will take it as ITC? 30 days, and it can be extended for a further period. And matching required or not required? Not required. How you will avail this ITC? Through ITC 1. Okay. And if the ITC does not exceed 2 lakhs, self-declaration. If ITC exceed 2 lakhs, CARCMA certificate. Same. So therefore you see this. Treatment is same. For 18(1)(a)(1)(b), the treatment is same. But the difference is what? 18(1)(a) you are liable to get registered and you made application for registration within 30 days. But 18(1)(b) you voluntarily got registered. Then which date closing stock should be taken? Immediately before the date you are liable to get registered. Here immediately before the date of registration. Understood? Now come back to 18(1)(c). 18(1)(c). 18(1)(c), you were under composition scheme. You are a registered person under composition scheme. One of the disadvantage of composition scheme is that a person under composition scheme cannot take ITC on their inward supplies. So as you were under composition scheme, ITC not availed. Okay. Now you are migrating from composition scheme to regular scheme. Now can you take ITC on your closing stock? Yes. And what is that closing stock? Which date? 110 you are migrating. Means we need to see the closing stock as on 39. So closing stock should be purchased within 1 year prior. What is the extra closing stock we have here? Raw material as such, raw material in WIP, raw material in FG. What is extra they are giving credit? Capital goods. But how much they are giving credit on capital goods? GST paid minus. You understood the logic behind 5%? Because depreciation. We use the capital goods now. That's why minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. Okay. And thereafter within 30 days or such extended period. Okay. So we need to file ITC 1. That is after migration within 30 days or extended period. We need to file ITC 1 to avail the ITC on closing stock. If the ITC does not exceed 2 lakhs, self-declaration. If the ITC exceeds 2 lakhs, then CACMA certificate, that is 2 lakhs. Okay, modify that, it is 2 lakhs. Okay, then, so what is that difference you can find here? Here matching is required. 18(1)(a)(1)(b), matching not required. But here matching is required. Correct? What is another difference that you can find? 18(1)(a)(1)(b), we don't have capital goods, but here we have capital goods. Rest of the information is same. Then next, you see this 18(1)(c), registered person migrated from where to where? Composition scheme to normal scheme. And what is it they can take as ITC? Inputs in stock, inputs contained in WIP in stock, inputs contained in FG in stock, and capital goods. Matching required or not required? Required. Which date closing stock should be taken? Immediately before the date of migration. Then next 18(1)(d). You look into 18(1)(d) and tell me what is the difference you can find in 18(1)(d). There is a registered person who is making exempted supplies. Now he migrated to making taxable supplies. Okay. Now we need to see the closing stock as on 39. That should be purchased within 1 year prior. Everything is same. Raw material as such, raw material in WIP, raw material in FG, capital goods. So ITC can be availed within 30 days in ITC 1. If it does not exceed 2 lakh, self declaration, exceed 2 lakh CACMA certificate. Got it? Now, so what is the difference between 18 1A 1B versus 1C 1D? That is first to 2 versus next to 2. What is the difference? Very good. 1A 1B matching not required. 1C 1D. Very good. Super. Then one more difference. We will not take credit on capital goods in case of 1A 1B, but we can take the credit on capital goods in case of 1C 1D. One more difference, small difference. Registration. 1A 1B, now only you are getting registered. 1C 1D, already you are registered. Okay. So that is the difference between these two. Then what is the difference between 1A versus 1B? Just the situation. 1A is liable to get registered and made application within 30 days. Here voluntary registration. 1C 1D, composition scheme to normal scheme. Then exempted supplies to taxable supplies. Good pa. Then 18 subsection 2, this is common in all the above cases. What is the time limit within which the closing stock should have been purchased? Within 1 year prior. Means from the invoice date to the closing stock date, it should not be more than 1 year. And ITC with respect to GST paid on inputs can be availed as ITC. In case of capital goods, ITC shall be GST paid minus 5% into number of quarters from the date of purchase till the date of migration or conversion. And we need to file an electronic declaration. What is an electronic declaration? ITC1. All these points are common for 4. Okay. ITC1 shall be made within 30 days or such extended time. And this declaration will be certified by practicing CACMA if the claim of ITC exceeds more than, that is exceeds 2 lakhs. Then next one, we are discussing 18 subsection 3. 18 subsection 3 talks about transfer of ITC. When there is transfer of ITC, easily remember pa, because it's a theory question. Whenever you get a theory question on, write a brief note on transfer of ITC, you need to write this. Easily remember, please listen. Whenever there is a transfer of business, transfer of business means from one person to another person, there is a transfer of business with specific provision for transfer of liabilities. It should not be just like the transfer of business. All assets and liabilities should be transferred from transferor to transferee. Then from the transferor credit ledger, some balance will be there na, that will be transferred to transferee's credit ledger. Got it? For that reason, transferor should file a form. What is that? ITC 2. ITC 2. Previously it was ITC 1. The previous case ITC 1. This case it is ITC 2. And this ITC 2 should be certified by a practicing CACMA that this particular transfer of business is with specific provision for transfer of liabilities. So this should be certified by a chartered accountant or a cost accountant. Got it? Amount, no amount. Even 10 rupees transferred also, that should be certified by CACMA. Is it clear? Now read the first point. Where there is a, everyone read. Where there is a change in constitution of a registered person on account of what? Sale, merger, demerger, amalgamation, lease or transfer of business with specific provision for transfer of liabilities, the said registered person shall be allowed to transfer the ITC which remains unutilized in his electronic credit ledger. To whom? To such sold, merged, demerged, amalgamated, leased or transferred business. Okay. And transferor will furnish the details of such transaction on sale of business in which form? ITC to electronically in the common portal with request to transfer unutilized ITC to the transferee. Understood? And we need to get a certificate from CARCMA. Now listen. In case of merger, no problem. Two entities come together to become a single entity. So both the entities will transfer. But in case of demerger, a single entity is getting separated into two entities. Then how the ITC can be transferred? In the assets ratio. Got it? For example, AB Limited is getting demerged into A Limited and B Limited. Now A Limited will have some assets, B Limited will have some assets. So now AB Limited will have the ITC that will be transferred between A Limited and B Limited in what ratio? Assets ratio. In case of demerger, credit shall be transferred to the new entities in the ratio of net assets. What is the meaning of net assets? Total assets minus ITC. Except ITC, everything would have been transferred. Now ITC only should be transferred. But while taking the assets, whether you need to take only those assets on which ITC availed or all assets? All assets. Land, building, everything. Whether ITC availed or not on such assets post demerger. Next, suppose if there is a death of sole proprietor. So there is a person, sole proprietor, he is dead and his son has taken over the business. Now when his son has taken over the business, can his son continue with the same registration? No. His son cannot continue with same registration because you all know that GSTIN is a 15-digit number. In that 15-digit number, the 10 digits is connected to your permanent account number. So whenever the son takes over the business, son's permanent account number will come, which means that there is a new registration they need to obtain. Now my question is, from father registration to son registration, can the ITC be transferred? Yes. Transfer or change in ownership of business will include transfer or change in ownership of business due to death of sole proprietor. The next one, transferor and transferee should be in the same state. For example, I have a e-commerce business and transferor in Tamil Nadu, transfer in Maharashtra. Can the business be transferred? Yes. Business be transferred because e-commerce means what? One app, a website, that much only. We can transfer. But the ITC cannot be transferred because see the condition. Transferor and transferee should be in the same state. The next point. When there is a single registration that is converted into multiple registrations. See, within the state, either I can have a single registration or with respect to each place of business, I can go for a separate registration. Example, in Tamil Nadu, I have 4 businesses, 4 place of business, Chennai, Madurai, Coimbatore, Salem. I have 4 place of business. Now in that case, I have 2 options. Option 1, for all these 4 place of business, I can obtain a single registration, or for each place of business, I can go for a separate registration. Now, I obtained a single registration and I continued in the business for 2 years. Thereafter, I decided to go for separate registration. Now, the single registration is split into separate registration. So far as I have single registration, some ITC will be there. Can the ITC be transferred to these 4 registrations? Yes, like demerger. In what ratio? Assets ratio. See that. When a single registration gets converted into multiple registrations within the state, then also ITC against a single registration can be distributed to multiple registration by filing form GST ITC 2A. And which ratio we need to follow? Assets ratio as on the date of new registration should be considered for this purpose. Is it clear? Then ITC2 to be certified by CACMA irrespective of the amount of ITC. But this 2A form, that is single registration to multiple registration, CACMA certification not required. However, ITC2A is not required to be certified by CACMA. In case of demerger, which date balance of ITC should be taken? Whichever date you are transferring the ITC, that date balance of ITC to be taken. But the assets ratio should be immediately after demerger. Because say demerger happened in March and you are transferring the ITC in December. Now don't take the assets ratio as on December because March to December lot of assets would have been purchased. So you take the assets ratio as on March but ITC balance as on December and you distribute the ITC. Read that wording. In case of demerger, balance in ITC as on the date of transfer and ratio of assets on the date of demerger to be considered. Okay. So say you can write there example demerger in demerger in March 2024 but ITC transferred in but ITZ transferred in December 2024. Then assets ratio of which date? March 2024 is relevant. Assets ratio of March 2024 is relevant. Demerger in March 2024, but ITZ transferred in December 2024, then assets ratio of March 2024 is relevant. Is it clear? Then look into the next area, that is 18 subsection 4 and 29 subsection 5, which talks about reversal of ITZ on closing stock. So far what we have seen is availment of ITZ on closing stock. Now reversal of ITZ on closing stock, which is opposite of 18.1c and 18.1d. What is 18.1c? Just turn the previous pages and see. What is 18.1c? From where to where you are going? Composition scheme to normal scheme. 18.1d. Exempted supplies to taxable. Now reverse. Normal scheme to composition scheme. Clear? Then next, taxable supplies to exempted supplies, and even cancellation of registration. In these three cases, we will reverse the ITZ on closing stock. What is the closing stock? Same. Raw material as such, raw material in WIP, raw material in FG. On these three raw materials, whatever ITZ you avail, that much you need to reverse. Capital goods also you need to reverse. But how much credit you need to reverse on capital goods? First, ITZ avail divided by 60 months, because the life of the capital goods will be assumed to be 5 years, 60 months into balance life. Maybe you used for 12 months. Means what is the balance life? 48 months we need to reverse. Is it clear? So why we need to reverse? Yeah, the moment you are in composition scheme, you cannot enjoy ITZ. The moment when your exempted supplies are there, you cannot take ITZ. The moment you are cancelling your registration, you cannot enjoy ITZ. But you have the stock. So on that stock, whatever ITZ already you enjoyed, now you need to reverse. Is it clear? Then, inputs and capital goods can be purchased any time on which ITZ availed. What if ITZ is not at all availed? See, you have not at all availed ITZ, you don't have to reverse any ITZ. So if ITZ not availed on such inputs and capital goods, then reversal shall not arise. What if you purchase capital goods 5 years before? What if capital goods you purchase 5 years before? Life over. So there is no balance life. So you don't have to do any reversal. See the next point. If the capital goods are purchased before 5 years on which ITZ is availed, then reversal shall not arise. Then next one. If invoice pertaining to such capital goods is not available, then so I purchase, sir, but invoice is missing, sir. Then you take the market value. You take the market value as on the closing stock date. So if invoice pertaining to such inputs not available, then market value as on 31/3 can be considered, and we need to get a certificate from a practicing CA CMA. And what is the form here? ITZ 3. For reversal of ITZ, we have ITZ 3. Suppose after reversal of ITZ, still there is some balance in ITZ. What will happen to the balance in ITZ? That will be lapse. For example, we need to reverse 1,50,000. The balance in ITZ 2 lakhs. So 2 lakhs, 1,50,000 we will reverse, adjust. So remaining how much is left? 50,000. That will be lapsed. For example, we need to reverse 1,50,000. The balance is only 1,25,000. So what we will adjust 1,25,000. So still we need to pay 25,000. So if there is any shortfall for reversal, then such shortfall shall be payable using cash ledger, and we need to do this computation separately for CGST, SGST, UTGST and IGST. Got it? So that is about section 18 we have completed. We are left with only two more sections, section 19 and section 20. Section 19 is about job work, 20 is about input service distributor, that is not there for CA intermediate. This is a CA intermediate book, that's why I gave CMA intermediate extra topics. In that CMA inter extra topics, I have added these sections. Okay, section 19 which talks about job work provisions, you can see job work provisions, and section 20 and 21 input service distributor. Okay, so these extra information you have for syllabus. With this, input tax credit is over. Okay, so what we will do, we'll take a break, and in the afternoon session we will discuss this and complete the illustrations that is there. With that, ITC chapter will be end. Then we will see some other topics. Okay, and so some students asked me yesterday, I just wanted to clarify. So as we are starting the next revision for all other subjects, so either you can attend face to face, or you can attend online live, or both. Okay, which means you pay for online live, you can come and sit in the face to face for 1 day, 2 days, remaining days when you are not able to attend, you can attend online live also. That option is there. And for you, you will get a backup of these classes, and you can watch till the end of the exam, those who paid, because IDT it's already there in YouTube, you can watch it. Whereas other subjects also we will be giving to you in the app, and you can watch either in your laptop or you can watch in the mobile, anywhere you can watch till June 30, till your exam month, you can watch it any number of times. Okay, so when you pay the charges, you will get all these facilities. Got it? Fine. Thank you. We'll meet at 2:15. Okay. Okay, we'll start. See this question. This is illustration 33 from your study material. Measures VMA, a registered taxable person under regular scheme, provides the following information in respect of supplies made by it during the month of April 2024. They gave these details. Following additional information is provided. Compute the minimum net GST payable in cash by measures VMA for the month of April 2024. See the first one. Interstate supply of goods. Interstate supply of goods means what is the type of liability? IGST. Then, so whenever you get a question like this is related to computation of net GST payable. So you need to prepare your answer in 4 parts actually. So this is question related to computation of net GST payable. Computation of net GST payable. What is actually net GST payable? Gross GST payable minus ITZ is known as net GST payable. So somewhere you make note of this and keep. You have to prepare total 4 statements. The first statement that you need to prepare is gross GST payable. Okay, computation of gross GST payable. Computation of gross GST payable under FCM. So this is related to our outward supplies. For our outward supplies, whatever is the gross GST payable that we need to take. The second statement is computation of GST payable under RCM. Computation of GST payable under RCM on inward supplies. So first one is on outward supplies. On outward supplies, whatever is the GST payable under FCM on outward supplies. Second one is computation of GST payable under RCM on inward supplies. The next one is ITZ, computation of input tax credit, computation of net eligible ITZ. Net eligible ITZ means whatever is the final ITZ after doing the proportionate calculation etc. and all. And finally it will be computation of net GST payable. Computation of net GST, that is nothing but statement number 1 gross GST minus statement number 3 that is ITZ. Thereafter we need to add statement number 2. You understood? Statement number 1 that is gross GST payable under FCM. From that we need to reduce, from statement number 1 we need to reduce ITZ, statement number 3. Then we need to add RCM liability, because RCM liability we cannot pay using ITZ. Input tax credit we cannot use for payment of GST under RCM. Okay, so just these 4 statements we need to prepare to arrive at computation of net GST payable. Right now this question is based on that only. Okay, so finish, make note of this. So computation of net GST payable, total 4 statements. Statement 1, computation of gross GST payable under FCM on outward supplies, computation of GST payable under RCM on inward supplies, computation of net eligible ITZ, finally computation of net GST, which is nothing but gross GST minus ITZ plus RCM liability. Okay, now see this question. They have given interstate supply of goods. Interstate supply of goods means what liability? IGST liability, 2 lakhs. And what is the rate of IGST given? 18%. Okay, So therefore we need to put it in which statement? First statement. So write down. So write down the answer for this in your notebook. Take your notebook. So let's see the answer. So presentation you will get to know. That's why. So first take statement number 1. What is statement number 1? Computation of gross GST payable under FCM. Write down. Statement number 1. Illustration 33 of ICMI study material. Illustration 33. This is page number 160. So that later you can see the question. Illustration 33, page 160. Illustration 133, page 160. So first one we need to take computation of gross GST payable under FCM. Computation of gross GST payable under FCM on outward supplies. Computation of gross GST payable under FCM on outward supplies. You need to prepare a table, particulars, CGST, SGST, IGST, like that one table you prepare. Particulars, 3 amount columns, and amount columns just small columns, particulars bigger column, particulars, then CGST, SGST, IGST. Okay, in particulars you write down interstate supply of goods. Interstate supply of goods. Interstate supplies means IGST. So in IGST column you take 2 lakhs into 18%. In IGST column you write 2 lakhs into 18%, that equals to 36,000. Okay, next second one. Intrastate supply of 1000 packets of detergent at rupees 400 each along with a plastic bucket worth rupees 100 each, with each packet being a mixed supply. So when 2 or more supplies given in a single transaction, we either call it as composite supply or we call it as mixed supply. If it is a composite supply, what we will do? We will take the rate of principal supply. Principal supply means predominant element in the transaction or main element in the transaction. We take that principal supply and apply it on the entire transaction. Okay, so that is composite supply. If it is mixed supply, what we will do? We will take the highest rate and apply it on the entire transaction. Okay, so right now it is composite supply or mixed supply. It is mixed supply. Mixed supply means we need to take the highest rate. Between detergent and plastic bucket, what is the highest rate? You see there, detergent, what is the rate? 18%. And plastic bucket, what is the rate? 28%. So highest rate is 28% and it is given as intrastate. So what we need to do? CGST, SGST. 28% means 14% CGST and 14% SGST. So write down in particulars, sale of detergent along with plastic bucket. In particulars write down sale of detergent along with plastic bucket. Sale of detergent along with plastic bucket. Sale of detergent along with plastic bucket. What is the value? 1000 packets into 400 rupees each. So 1000 into 400 means 4 lakhs. 1000 into 400 is 4 lakhs. So go to CGST column. Go to CGST column and write down. So 4 lakhs into highest rate 14%. 14%. Write the numbers. 4 lakhs into 14%, like that you write. But you can listen and write now, or you want me to write? You can listen and write. I can help you in writing. Please take the column, 4 columns you taken particulars, CGST, SGST, IGST. In the particulars you have written sale of detergent along with plastic bucket. And what is the amount? 1000 into 400, 4 lakhs into, why 14%? Because highest rate we will take 28%. So into 14%. So 4 Okay, say this. So you have written 56,000 CGST column, 56,000 SGST column. Then next one, see the third transaction, supply of online educational journals to Messrs XYZ, a private coaching center providing tuition to students of class 10 and 12 being intrastate supply. So what is the treatment of this? Supply of online educational journals and periodicals. So supply of online educational journals and periodicals, we have one exemption. If it is given to education institution providing education up to, education institution providing education as a qualification, like we have three types of education institutions. In that, colleges, etc. and all, if there is online educational journals and etc. exempted, but here it is to a coaching center. To a private coaching center, we don't have any exemption, it will be taxable. And whether it is intrastate or interstate, intrastate. So write down supply of online educational journals. Supply of online educational journals, we don't have any exemption with respect to that. Supply of online educational journals. What, are you doing anything in the afternoon or what? Daily afternoon this problem is happening. Supply of online educational journals and periodicals. So what is the value? 1 lakh. 1 lakh into, what is the rate of GST? 9%. Intra means what? CGST 9%, SGST 9%. So write down 1 lakh into 9%, 9%. That is 9,000, 9,000. CGST column you write down 1 lakh into 9%, 9,000. SGST column also 1 lakh into 9%, 9,000. Okay. Next transaction. So Messrs VMA has also received the following inward supplies. So these are all inward supplies, and next opening balance is given, additional information. So outward supply over, you do the total of this, that is the statement 1 total. Statement 1 total. How much is the statement 1 total? 65,000, 65,000 and 36,000. You got? So you can see the answer, 65,000, 65,000 and 31,000. The 36,000. 65,000, 65,000 and 36,000. Okay. Next. Then you see inward supplies. Inward supplies, we don't have anything in RCM, but ITZ. So second statement we can skip, because here we don't have anything related to RCM. But in question we have anything related to RCM, we need to take. Otherwise, you can skip this second statement, okay, and you can go to the third statement. Third statement you can see. Okay, just 1 minute. They are changing. Particulars CGST, SGST, IGST. In particulars, we write down opening balance. In particulars, opening balance. CGST column 10,000, SGST column 10,000, IGST column 80,000. They have given some opening balance. Okay. Then next one, see the first inward supply. Interstate supply of goods, out of which invoice for goods worth 40,000 is missing and no other tax paying document is available. Means I can take ITC only for 1 lakh. That too it is interstate. Okay. So write down interstate purchases. In particulars write down interstate purchases. Interstate purchases. Go to IGST column. Go to IGST column 1 lakh. Don't take 1 lakh 40, only 1 lakh into rate of GST 18%. 1 lakh into 18%, that equals to 18,000. 1 lakh into 18%, that equals to 18,000. Then next one, repairing of bus with seating capacity of 20 passenger used to transport its employees from their residence being intrastate supply. Okay, so repairing a bus with seating capacity of 20 passenger. 20 passenger means more than 13, correct? Is it a blocked credit? No. So as motor vehicle purchased is not a blocked credit, repairing is also not a blocked credit, they can take ITC. Write down. Repairing of bus, and it is given as intrastate. Intrastate means CGST, SGST. So go to CGST column, 1 lakh into 9%, 9,000. SGST column also 1 lakh into 9%, 9,000. Now you do the total of this. You will get 19,000, 19,000 and 98,000. You understood? Now last statement. What is the last statement? Computation of net GST payable. Computation of net GST payable. In this computation of net GST payable, you need to take gross GST payable as per first statement. How much is the gross GST payable as per first statement? 65,000, 65,000, 36,000. Again you prepare the same table. Particulars, CGST, SGST, IGST. In that particulars, gross GST payable, CGST 65,000, SGST 65,000 and IGST 36,000. Okay, then we have ITC. Which ITC we should use first? IGST. Write down, minus IGST credit utilized. Minus IGST credit utilized. How much is the IGST credit that you have? 98,000. Check your notebook. 98,000. And in that 98,000, so what we are doing, first we are adjusting with IGST liability. What is the IGST liability? 36,000. So adjust with 36,000. 98,000 minus 36,000. Then still how much we have? Minus 36,000. We have 62,000. And therefore we can use it for either CGST or SGST or both, correct? But I told you, whenever you have liability equally, you divide it by 2. So divide by 2. So that is 31,000, 31,000. So right there, IGST credit utilized in CGST column minus 31,000, SGST column minus 31,000, IGST column already 36,000. Now then we have CGST and SGST credit utilized. How much is the CGST, SGST credit utilized? 19,000, 19,000. Reduce it. Minus CGST and SGST credit utilized. 19,000, 19,000. CGST column, SGST column. CGST column 19,000, SGST column 19,000. Now you do the total of it. Balance, that is 15,000. So CGST will be 65,000 minus 31,000, correct? 31,000 minus 19,000, that is 15,000 CGST and 15,000 SGST. You check the answer in the book. So that is the answer given there. You understood for presentation? So there is a high chance of asking this question for 7 marks. This question. This question means not exactly this question. Like this question, there is a chance of asking for 7 marks. And really, if they want to make the question little difficult, they will give some transactions which are covered under RCM. Okay. Then, so look into, this is one question. Next we have section 19, 20 and 21. Take this extra topics, page number 21. Take the extra topics handout. Section 19 read with section 143 of CGST Act. job work provisions. So first of all, whenever we are sending the goods on job work, so why we will send the goods on job work? Not everything will be made by the manufacturer. There will be some ancillary industries. To those ancillary industries, the goods will be sent for processing. Once the processing is completed, the goods will be returned back. Okay. Now, whenever the goods are sent for job work, is it supply or not a supply? You tell me, is it supply or not a supply? Definitely it is not a supply. Why? So is it for consideration or without consideration? Without consideration. So 7.1a will not come. Even 7.1c, I told you 4 activities. D, R, I, P. These also will not come. It's not disposal of business asset on which ITC avail. It's not a related party transaction, import of service, or principal agent transaction. So I am a principal. You are my job worker. I am sending the goods to you for job work. When I am sending the goods to you for job work, is it supply or not a supply? Not a supply. So as it is not a supply, so whether I need to pay any GST or not today, I am not having any liability. Got it? Now, should I reverse any ITC? No need to reverse ITC, enjoy. But there is section 143 which says that the goods should be returned within the time limit. That time limit is given under section 143 which says the processed goods. Processed goods means what? I am sending you raw material. You should convert into finished goods. And that finished goods should be returned. What is the time limit within which you need to return the finished goods? 1 year. And it can be extended for a further period of 1 year. And if it is capital goods, the capital goods should be returned within a period of 3 years. And it can be extended for a further period of 2 years. So tell me what is the time limit within which the input should be returned, pa? 1 year plus 1 year. Plus 1 year means it can be extended for 1 year. And capital goods should be returned within a period of 3 years plus extended further for 2 years. So say this, there is a job worker and there is a principal who can transfer inputs or capital goods to the job worker with payment of tax or without payment of tax. Without payment of tax. Because I told you, whenever the principal is sending the goods to job worker, it is not a supply. Consequently, GST is not payable. Now we need to see whether principal send the inputs to the job worker. Yes. And whether the principal bring back the inputs within 1 year. Yes. No consequences. Correct? What if the goods are not brought back within 1 year? Then on expiry of 1 year, it is deemed that the principal has supplied the goods to the job worker and the principal should pay the GST. Again, I am repeating carefully, listen. Today I am sending the goods to you. You should return me the goods within 1 year. If you are not returning me the goods within 1 year after processing, then on expiry of 1 year, it is deemed that I have sold the goods to you and I need to pay GST. Is it clear? So, deemed to be supply. Deemed to be supply. On which date? After expiry of 1 year, it is deemed to be supply at the time of dispatch to the job worker. Deemed to be supply on which tax is payable. Means, after 1 year, you came to know that you have made sale before 1 year. Purida. After 1 year, you came to know that you have made sale before 1 year and you need to pay now the tax liability along with interest. It is like you are preparing for your CMA final exam and institute is telling, no, your CMA intermediate is result is disqualified. Again, you need to write CMA intermediate. How much torturous it will be, correct or not? Like that, after 1 year, we are coming to know that 1 year backwards we should have paid the tax. So that you need to pay now means you need to pay along with interest. Is it clear, pa? So job worker is sending, principal is sending, the time limit is not there. This can be returned even after 3 years, 4 years, 10 years, etc. also it can be returned. Okay. Then suppose if it is other capital goods, what is the time limit within which it should be returned? Within a period of 3 years. If the principal bring back the capital goods within 3 years, yes, no consequences. If the principal is not bringing back the capital goods within 3 years, then in that case, it is deemed to have been sold and it should be paid, GST should be payable along with interest. So see there, whether these are molds and dies, Jigs and fixtures, yes. No time limit to return to principal. No, it is other capital goods. Whether the principal bring it back within 3 years, yes, no consequences. What if it is not returned within 3 years, deemed to be supply, on which tax is payable along with interest at 18%. Easily you can remember this part. That is, there is one boy who is in love with one girl, okay, and so this girl is giving lot of gifts to the boy, chocolate, greeting card, shirt, t-shirts, like that, okay, gifts she is giving. And what happened? So till the time everything is normal, no problem, but suddenly one breakup will happen. When the breakup happens, what that girl will say? Whatever I have given to you last 2 years, give me everything. Correct? Understood or not? So like that, till the time 143 is satisfied. You understood? Till the time section 143 is satisfied, no problem. The moment section 143 breaches, then what will happen? Section 19 will come into picture. What does section 19 will say? Pay. Everything you pay along with interest. I ate that chocolate. It's okay. You pay. Then I have to buy and I need to give. You understood or not? So that is the impact here. You got it? So till the time, that is, the goods are brought back within the time limit of 1 year or capital goods 3 years, no problem. Otherwise, we end up paying the GST on that particular amount. Okay, so that is this. Now look into some additional points related to this. Job worker can avail ITC with respect to inputs or input services used for job work. So job worker also will buy some material na, on which can the job worker take ITC? Yes. If the processed goods or capital goods are returned by job worker after 1 year or 3 years, it is treated as new supply by job worker and chargeable to GST, which can be availed as ITC by principal. Is it clear? That is, what will happen? Say 1 year over and 3 years over. Thereafter, the job worker will be returning the goods. See, 1 year over, 3 years over, I will pay GST along with interest. Over na, that's complete. Thereafter, the job worker will return the goods. Thereafter, when job worker returns the goods, that will be treated as a new supply made by the job worker to the principal. Okay, read it again. If processed goods or capital goods are returned by the job worker after 1 year or 3 years, it is treated as new supply by job worker and chargeable to GST, which can be availed as ITC by principal. Then, can this period of 1 year be extended? Yes, it can be extended for a further period. What is that further period? 1 year in case of processed goods and 2 years in case of capital goods. Read that. The period of 1 year in case of processed goods and 3 years for capital goods on sufficient cost being shown be extended by the commissioner for a further period not exceeding 1 year or 2 years respectively. Okay. Then next one. Next point, you see, if the job worker is not registered, what will happen if the job worker is not registered? The principal should declare the job worker's place as the principal's additional place of business. So, for example, you are an unregistered person. Why you are an unregistered person? Maybe your aggregate turnover has not exceeded the threshold limit. Okay. If the job worker is not registered, the principal should declare job worker's place as additional place of business of principal. Okay. If goods are supplied from job worker's place, and the jurisdictional officer must be intimated about the job work contract. Processed goods may be brought back to principal's place, or can be sold directly from job worker's place, or it can be exported from the job worker's place. What is it they are telling? Whatever processed goods that are there, that can be brought back to principal's place, or that can be sold from there itself, or it can be exported also. Okay. And every principal should report the details in form GST ITZ 4. What is the form in which they need to report the details of goods sent on job work and received from job work? ITZ 4. And if the turnover of principal during previous year exceeds 5 crores, then they have to file this ITZ 4 half yearly by 25th of the month following every half year. So if I am the principal, I have to file ITZ 4. I told you total we have 5 forms. ITZ 1. What is the purpose of ITZ 1? Availment of ITZ on closing stock. Somewhere you write down ITZ 1. Form GST ITZ 1. First write down form. Then next column purpose, and thereafter next column time limit, thereafter next column CA/CMA certification. Write down form, next column purpose, what is the purpose of the form, thereafter next column time limit, what is the time limit by which that form needs to be filed, and finally CA/CMA certification. CA/CMA certification. First, what is the first form? Form GST ITZ 1. Form GST ITZ 1. What is the purpose of ITZ 1? Purpose, availment of ITZ on closing stock. Availment of ITZ on closing stock. What is the time limit? 30 days from the date of eligibility. 30 days from the date of eligibility. 30 days from the date of eligibility. Whether CA/CMA certification is required? Yes, if ITZ exceeds 2 lakhs. Yes, if ITZ exceeds 2 lakhs. CA/CMA certification is required. Okay, next one. Second form, ITZ 2. ITZ 2. ITZ 2, what is the purpose? Transfer of ITZ. In case of transfer of business, whenever there is a transfer of business, ITZ will be transferred. For that, transfer of ITZ in case of transfer of business. And what is the time limit? Not prescribed. No time limit. Not prescribed. Whether CA/CMA certification required? Yes, always. Yes, always. Next one, ITZ 2A. ITZ 2A. What is the purpose of ITZ 2A? Transfer of ITZ from single registration to multiple registrations. Write down purpose. Transfer of ITZ from single registration to multiple registrations. Transfer of ITZ from single registration to multiple registrations. And is there any time limit? No, not prescribed. Time limit not prescribed. And CA/CMA certification? No, not required. CA/CMA certification not required. Then next form, ITZ 3. ITZ 3. What is the purpose of ITZ 3? Reversal of ITZ on closing stock. Write down reversal of ITZ on closing stock. Reversal of ITZ on closing stock. And is there any time limit? No, not prescribed. Time limit not prescribed. Whether CA/CMA certification is required? Yes, yes, if market value is replaced with invoice value. Yes, if market value replaced with invoice value. If market value replaced with invoice value. Next, ITZ 4. ITZ 4. What is the purpose? Goods sent on job work and received from job work. ITZ 4. Goods sent on job work and received from job work. What is the time limit of ITZ 4? Listen. Listen carefully. First listen. If my aggregate turnover during the previous year, who will be filing ITZ 4? Principal, not job worker. If their turnover during previous year exceeds 5 crores, 2 times in a year they need to file. First half year from April to September, by 25th October. Second half year from October to March by 25th of April. Suppose if my aggregate turnover, I am the principal, if my aggregate turnover during previous year does not exceed 5 crores, then I need to file it only once, annually by 25th of the month following the year. Got it? So write down time limit, ATO during previous year exceeds 5 crores, time limit, ATO means aggregate turnover, ATO during previous year exceeds 5 crores, ATO during previous year exceed 5 crores, hyphen half yearly by 25th, half yearly by 25th of the month, half yearly by 25th of the month, in brackets otherwise it is annually by 25th, it is annually by 25th. Is it clear? Otherwise means what? If your turnover does not exceed 5 crores. And CACMA certification not required, no. Okay. Thereafter, after going home or some other time, you prepare this table beautifully and keep it, because in exam there is a chance of asking MCQs based on this. Okay. Next, coming back to this, written in form GST ITC 4 by principal, if the aggregate turnover of principal during previous year exceed 5 crores, half yearly by 25th October, 25th April, aggregate turnover of principal during previous year does not exceed 5 crores, annually by 25th April. In case when the goods are directly received by job worker from the supplier of the principal, 1 year or 3 years counted from the date of receipt by the job worker. Okay, simple here. Suppose if I am dispatching to the job worker, we need to count 1 year, 3 years from the date of dispatch to the job worker. Sometimes the job worker will directly receive the goods from my supplier. The date of receipt by the job worker, we need to count 1 year or 3 years. Okay, that's it. Now look into this illustration, how you may get a question. Sabhyata manufacturers received some inputs on 15/7/2020 and immediately availed input tax credit of CGST and SGST of rupees 1,32,000 paid on those inputs. On 27/2020, it sent the inputs to a job worker outside the factory for carrying out machining process, machining on the inputs, and the same were received by the job worker on 22/7/2020. The job worker returned the inputs on 5/7 after carrying out the machining work on the inputs. What is the date on which it is dispatched to the job worker? 27. What is the date on which it is received back from the job worker? 5/7/2021. Is it within 1 year? Yes, it is within 1 year. So therefore, there is no consequence. Correct? After carrying out the machining work on inputs. Discuss whether Sabhyata manufacturers is required to take any further action with respect to the input tax credit availed by it. No. As the goods are received back within 1 year, there is no consequence. Is it clear? Then look into the next one, next illustration. What would be your answer in the above question if the inputs are sent directly to the premise of the job worker without being first taken to stock by Sabhyata manufacturer? The goods were cleared from the supplier on 27 but received by job worker on 26/7. So when the goods are directly sent to the job worker, what is the date on which job worker has received it? Read the question. What is the date on which job worker has received it? 26/7. And what is the date on which they have returned to the principal? The job worker carried out the job work of machining and supplied the goods after machining to XYZ on 23/7. Is it within 1 year? What? 26/7. Hey. You studied and a foundation or something and came to inter, or somehow you came. 26/7, 1 year is 26/7/2021. 23 is before 26. Mathematics and all you know basic. Na? 23/7/2021 is within 1 year. So within 1 year. So again there is no consequence. So we should count from the date when the job worker has received it, okay, from that date within 1 year. So just go through the answer for these two questions and we will take a small break of 5 minutes. Some issue is there, let us sort it out, this electrical issue, then we will continue, okay. Okay, we'll start. See this, so we completed so far section 19. Now we are moving on to section 20 and 21, that is input service distributor. First let's try to understand what is input service distributor with the help of this illustration. There is a company MRF Limited which is having 4 factories F1, F2, F3 and F4, and what happened, there is a firm of chartered accountants who is providing services to these factories, that is audit services, and will raise invoice to corporate office. Usually some common services will be provided like audit, then marketing, advertisement or any other branding services. These are all common services. So these services are provided to the factories, but invoice will be raised to the corporate office. Now the corporate office can take the ITC and distribute the ITC to the branches. Okay, so ABC and Company firm of chartered accountants raised invoice to MRF Limited for 10 lakhs plus 1,80,000. Now what MRF Limited corporate office can do? They can take a ITC of this 1,80,000 and in turn distribute the credit to these factories. In what ratio they can distribute the credit to these factories? In the turnover ratio. Got it? So see the turnover ratio of these factories, 100 crore, 40 crore, 250 crore and 60 crore. In this turnover ratio, this entire credit of 1,80,000 is distributed between the factories. Now, whether the corporate office, they need to get a separate registration. Yes, means already in Tamil Nadu they have a factory for which they will get a registration. But again, for the corporate office, they need to get a separate registration, which means what is the total number of registrations for them? Total 5 registrations. How 5 registrations? For 4 factories, 4 registration, plus for ISD, there will be a separate registration. So total 5 registrations they will be having. Now you see the ratio, 10:4:2.5:6. In that ratio, the ITC will be distributed. Thereafter, this ISD will be filing a return called as GSTR 6 for the purpose of distribution of credit, and based on that, this 40,000, 16,000, 1 lakh and 24,000 will be reflected in the 2B of the division, that is factories, and they will be able to take ITC accordingly. Factory shall avail ITC in 3B and utilize for payment of liability. Understood? Now, here you need to understand the concept of input service distributor. So, who is an input service distributor? Input service distributor is a head office which will receive the tax invoices for input services and will avail the ITC and will distribute the credit to the branches which are under the same permanent account number. Now, see the definition first. So, who is an ISD? ISD is basically an office meant to receive tax invoices towards receipt of input services and distribute the credit of taxes paid on such input services to supplier units having the same permanent account number proportionately. And if this service is attributable only to one division, then the entire credit will be distributed to that division. Okay, say this, ITC of input services is distributed only amongst those recipients to whom the input services are attributable. For example, if the service is provided only to factory 1, then the entire credit will be distributed to factory 1. If the service is attributable to 2 factories, then the credit will be distributed only to 2 factories, like that. So, ITC of input service is distributed only amongst those recipients to whom the input service is attributable. Then, ITC is distributed amongst the operational units only and in the ratio of turnover in a state or union territory of the recipient during the relevant period to the aggregate turnover of all recipients during the relevant period to whom the input service being distributed is attributable. Means what? That is, say for example, during the month, if factory 4 is not working, during the month if factory 4 is not working, then in that case, the credit will be distributed to factory 4 or it will not be distributed to factory 4. It will not be distributed to factory 4. So, the credit will be distributed only to operational units. Can you see that word? Again read it. ITC is distributed amongst the operational units only, means only those units which are working for that particular month for those units only credit will be distributed, and in the ratio of turnover. What ratio we need to take? Turnover ratio. And which period turnover should be taken? Either take the turnover of the previous year or take the turnover of the previous quarter, as the case may be. Say this: relevant period is the previous financial year or last quarter prior to the month of distribution, for which turnover of all the recipients is available, and distributed ITC should not exceed the credit available for distribution. Means what? For example, how much is the credit that they are having? 1,80,000. Then whatever they need to distribute should not exceed 1,80,000. Means the sum of these four should not exceed 1,80,000. Is it clear? That is with respect to this. Then next one, ISD. How they will distribute the credit? They will be giving a ISD invoice. ISD should issue an ISD invoice for distributing ITC. It should clearly indicate in such invoice that it is issued only for distribution of ITC. Sometimes the credit may be wrongly distributed. For example, here instead of 40,000, 30,000 is distributed. Here instead of 16, 26,000 is distributed. Means wrongly, excess credit is distributed to factory 2. Then what they will do? For factory 2, they will give a credit note and reduce it by 10,000, and they will give a ISD invoice to factory 1, thereby they will increase it by 10,000. So whenever the distributed credit, read this, the ISD need to issue a ISD credit note for reduction in credit if the distributed credit gets reduced for any reason. If the distributed credit gets reduced for any reason, then they need to issue a ISD credit note. ITC available for distribution in a month is to be distributed in the same month. Okay, means what? For example, so April month ITC to be distributed in April month. Can they accumulate it for April and May and distribute it in May? No. April month ITC will be distributed in April. May month ITC will be distributed in May. So we cannot transfer or accumulate and distribute. And all these details which are distribution of ITC by head office should be reported in one return. What is that return? GSTR 6. And what is the time limit within which that GSTR 6 needs to be filed? From 13th of the month following every month. Okay. Then ISD is required to obtain a registration separately, even though it may be separately registered. So that's what I told you. ISD should get a separate registration, even though they already got registered. That's what here I told you. Even though they have a registration in Tamil Nadu, but separately they need to register as ISD. That is this point. Sometimes if the credit is wrongly distributed to a particular division in excess, then the excess credit distributed will be recovered from that division. That is section 21. Read this. If the ISD has distributed excess credit to any recipient, the excess will be recovered from the recipient with interest as if tax was not paid. Okay. So that is with respect to this. Then see these additional points. ISD shall distribute CGST credit, SGST credit as CGST credit, SGST credit to a unit in the same state where ISD is registered, and as IGST credit to the unit registered in different state. For example, where is corporate office ISD registered? Tamil Nadu. Factory 1 also Tamil Nadu. So CGST credit distributed to West Bengal and Karnataka respectively. The corporate office is registered as an input service distributor. All the units and centers of Arise India Private Limited are operational in the current year. The corporate office intends to distribute input tax credit for the month of October. The following details are available for such distribution. So basically they have 4 units in 4 different states. What are the states that they are having? Pune, Chennai, Kolkata, Bengaluru. Okay. So if you see, they have given the turnover details: 20 lakhs, 30 lakhs, 10 lakhs and 40 lakhs. Eligible ITC on input services attributable to a specific unit or center for the month of October. So this is specific unit. Specific unit means that credit belongs to that particular unit. So IGST 3 lakhs, CGST 30,000 and SGST 30,000 means it will be fully distributed to